Check 1, 2, baby. End of quarter. We did it. Another quarter. It started to kick in yesterday. Like the quarter end started kicking in yesterday. What up, hero? Started to kick in yesterday. Like the weight of the quarter being over. No, baby, looking to smash it out of the park this morning. Trying to trade $175 this morning. Bears thinking that they're going to be getting their money back this morning. Hell no. They ain't getting shit back this morning. We ain't done. Woohoo! What do we got going on? Oh, boy. You know, I was thinking this morning that before we made the jump, right? I would normally come into a end of quarter. And I love to disappear for like 2 weeks. Like the first 2 weeks of the new quarter, I'm usually like, fuck this, I'm done. Mostly because I'm worn out. I get, I was just talking to somebody on Twitter about it. I'll get too much screen time, right? Too much focusing on the market. We talk about that on the 1 minute trigger, right? We talk about scroll out a little bit. Just like ease off the like David AMS. A lot of you guys that trade futures, you guys trade what, 5-second charts, 1 second charts. I mean, a minute chart's nothing, right? When you're trading that's something that small, right? Though that's that time frame that's that small. So it's like you have to remember, like, scale out a little bit. Pull it back, look at a 1 hour, pull it back, look at a 4 hour, pull it back, just look at a daily chart. Sometimes I like to look at even weekly charts. It's refreshing sometimes to just take a peek, like just step back. And I think the quarter is always a good time for that, to just relax, chill out, reflect on your quarter. As a matter of fact, Nino is a longtime member. And I was meaning to get with him last night on Discord, and I wasn't able to. But this is the time to get with Nino and just talk with him, maybe have a talk with him and John Allen, stuff like that. And this is a time of reflection this is a time of reflection on your quarter. It's a time to look at your own. You guys know that I post, right, what my thoughts are every night for the next day. And I have to go back, of course, and look at my quarter and say, hey, was it good? Was it bad? Did I make money? Did I lose money? What was my wins, my losses? For for the quarter, and then also my trading, all that shit. You have to process all that stuff. So what happens to me is when I get an end of quarter, so much screen time, I usually need to decompress from all of that to start a new quarter, have a fresh perspective. So if any of you out there don't do that, and you get too much screen time, of course I can't. We made a jump, right? I can't do that. I don't have that luxury anymore. I used to have that luxury, but I don't have it anymore. But if you do want to do that every quarter, there's no reason not to do that. Is my point to you. There's no reason that it's okay for you out there to take a week and decompress, literally get some time away from the screens. It really does help with perspective sometimes. And I want to make this point very clear. When I take that break from the screens, I still check up on the market every day, but it's I just talked to you about getting away from a 1 minute or a 5 second or looking at it from a day or a week, right? Just not looking at the screens all day long gives great perspective. Like when you just show up and you're looking at it once in the morning and you walk away from it all day long and do something different, and then at the end of the day, come back and look at it again. It really does help people be better traders, investors, reflect insight, all that kind of stuff into your quarter. So I'm making the jump. I can't do that anymore, right? So what happened to me yesterday? I got off the stream yesterday, and it's out of quarter, so I'm running ragged, right? Look at me this morning. I've shaved this morning. I've been running ragged, been burning, 18-hour days, 16-hour days, 18-hour days. I got a little bit of free time. Okay, now back to 18-hour days. And I sat down. I have a reading room. I got a game room next to a reading room, and it's like a place. It's like a place in our home that is a respite. My older dog will go in there and jump on a couch and sit back and cuddle. And I got him a little pillow down there, and he cuddles all with it and stuff. And my youngest daughter will go down there, and when she wants some peace and quiet, she'll do some artwork. And it's just a quiet place in our home. And and there's no hustle and bustle. There's no cross traffic. There's no noise, any of that kind of stuff. So I went down there yesterday and sat down after the show. And we've got these really nice small blankets that you can unroll and stuff on these chairs and couches, and we got tables and art tables. We got a table, it's like an adjoining room with Dungeons and Dragons set up on an old Victorian table. Or I don't know, maybe it might be a Queen Anne or something like that. You got a big table with art supplies and all that kind of stuff. You got bookcases with games and books and you name it. I just sat down, and dog came over, climbed up on the side of me, and then I dragged down a blanket. And I imploded. Woo. I was out cold and crashed, had a mini crash. And then later in the night, I was like, man, I'm not feeling this. I just don't feel this. But this morning I woke up and I feel energetic this morning. So I guess I decompressed, hopefully, in half a day or something for the new quarter or something like that. So anyways, let's get into it briefly here. Let me see if I can get over here and bring this up this morning for you. With just one quick second here. We'll take a look at some stuff coming up here. Bam, bam, close all that. Keep that one up right there. Let's take a look at the market brief. And we're gonna chat about something I haven't been doing, but I need to do. As we're launching right now in beta. We're not even in a full alpha launch right now, so we still have a lot of things to work on in the background. We had some tools. We're making better tools. We've got a bunch of stuff going on. But one of these changes I want to talk to you about this morning at some point. We're going to go over that in just a few moments. But just for this morning. I don't see any red graphics package yet. What do we got here this morning? Apple's bad quarter, blah, blah, blah. You mean rotation right out of Apple. What else we got here? Analyst calls, not a whole bunch of news that I can see. We're going to talk this morning about SMCI and I think maybe NVDA. VolWiz put out some stuff yesterday and this morning. He's been on fire the past couple days. Some stuff that he's noticed about some event type stuff associated with both of those tickers. So we'll take a look at that this morning. What else can I see here? FTX founder Sam Bankman-Fried faces sentencing in New York. Dude, it's so gross. Like, I keep thinking about this guy, and I keep thinking about his dad, and like his dad's wrapped up with what's her name from Massachusetts. It's like we have like our own royalty in this country, don't we? Like we tried to get away from a system of patriarchy or monarchy, and we still have that. We have that shit going on right now with money. So I don't see too much here this morning from CNBC. Kind of a nothing burger. Looks like everybody's taking a vacation today. So I'm not seeing anything too fancy-pantsy here. Fed's Waller sees no rush to cut rates amid sticky inflation data. It's funny to watch the Fed funds rate futures. So now we're looking at no cuts, right? I try to tell people all the time, like, it's just gambling. I get people that come in the show, and when I have the chat open, they'll come in the show and just be like, nah, man, the dot plot's real, and the Fed, what about the Fed's future fund rate? And I'm like, that shit's just fucking gambling. That's all we're doing. Pure gambling doesn't mean a goddamn thing. We're seeing that this morning as well. And I saw it yesterday more clearly. Next up, University of Michigan March final report. I don't know if you want to take a look at that this morning. U.S. pending homes index actual 75.6, forecast 74.3. And we also know, I mean, the last pending home sales and home sales were horrible this past winter and into February, but it also coincided with seasonality. This should get better and better as spring opens up. U.S. pending home sales change month over month, actual 1.6 versus the forecast of 1.5. University of Michigan expectations final was 77.4. Forecast was 74.7. 5-year inflation final was 2.8%. Forecast 2.9. 1-year inflation final actually 2.9. Forecast was 3.1. Now, on this stuff right here, we talked about this earlier last week. Yeah, GDP, baby. 3.3 versus 3.2. I mean, the numbers are fucking being massaged here across the board. I've said this message to you so many times. And the real one that you really want to be watching is the real one that you really want to be watching here is going to be unemployment. Now, jobs, wages catching up, that stuff does matter. But you really want to be watching right now unemployment. And when we're looking at all this macro stuff, I really want to see like the unemployment rate drop at this point. If the unemployment rate continues to spike, that would be velocity in unemployment. We're not there yet, so don't get crazy on it. But if I was a bear and you were trying to watch like, I don't know, the yields or the inverted yield curve or any of this stuff, GDP, inflation, all that macro shit, if there was one, if you were a bear you want to be watching, it's definitely unemployment. That is the one. So that's the one that I'll be paying attention to. Everybody's like PCE this and PCE that and I don't know, fucking jobs and whatever. I'm like, no. Right now it's unemployment. If there's one for you to be watching, that is the one. Bonds decline and equities linger on rate cut pushback. That's from the European market. Wrap. Treasuries fall amid Fed talk while Chinese stocks rise. We talked about this last week, right? There was a rotation happening in Japan to China, and they were whispering, don't worry, just move the money to China and America will be all right. And you see that happening too. We don't have much today. I think we've got one speaker later this afternoon. So today on the 28th, we've got a, wait a minute here. Yep, we got claims this morning. We've got a GDP at 8:30. We are GDP at 8:30. Claims 214,000, but this is off the prior data. This claims number comes from the other unemployment data that we got that was already negative, so that this is expected to some extent. We got pending home sales at 10 a.m., which just happened, and then we had consumer sentiment final 10 a.m. Tomorrow we get the PCE numbers, core PCE. They don't seem to care about that, but we do have Jerome Powell speaking at 11:30 tomorrow. This is a great trade. There's a guy named Dre to the Moon on FinTwit. He loves this trade here. This is the you fade this trade right here. We're going to be closed, of course, tomorrow, but normally you would fade this trade regardless of initial reaction. If we blood PCE, you would buy it about an hour later. If PCE is good, and if we blast off, right, from like 8:30 till 9:30 or 9:30-ish, 10:30, whatever that is, you sell the fuck out of it to the end of the day. It's a kick-ass trade. It's like a sure thing. So we're kind of being robbed of that tomorrow with the markets being closed. And then today, let's take a peek and just see what we got coming up here. If we have any auctions, any of that kind of stuff. This is all rig stuff. We've got some reports coming out on corn, soybeans, wheat thins. And we've got 15-year and 30-year rates at 12 p.m. So 11:30 to 12, we've got some vol here. You see this? A little bit right here. Not too much, but 11:30 to 12 o'clock, there's a little bit of volatility right in here. Let's keep your eyes on that. We are a little weak right now. It's 10:30 in the morning. We're heading into some of this vol right now. And that's all I got for you guys on this stuff. Now, we're going to switch over. I want to talk to you guys about something. So this is the charts. This is one of the charts that I do for you every night. And I'm thinking I have to switch the account I'm going to do it on. But what I want to do is leave those charts up for you in the morning. This is what I was saying we'd get to. So in our regular format on the bottom right or left-hand side, I'm going to leave up the SPY, QQQs, and IWM projections from the night before to see how they're trading against actual price action. Or if I do an update in the morning, we might lose the stream here, by the way. If you can still hear me, it's possible we lose the stream. I can already see that the stream wants to fucking... Hold on a second here. Stream wants to go down again. I don't know why this is happening. I honestly don't. I got to take a look at... Over the weekend, I'm going to take a look at this. It's been happening the past week or so. Now, what I'm going to try to do is... let me tell you what my plan is. So when I get off of the show every day, right, I try to take a decompression moment, a break, see my kids, see my wife, see my dogs, take a walk, get outside and touch grass, whatever I can do. Sometimes going out to eat. And then I come back home and I do your market brief for you. And sometimes most of the time they're spot on. But sometimes things happen. Now, it hasn't been too bad. I haven't seen anything this past month. By the way, officially, but I think today is like a month. We've been launched beta for a month. So I've looked back and I'm like, we've done fairly well. Like 75% is pretty fucking good. That's some Hall of Fame type of shit. Truly. That's better than Hall of Fame. Hall of Fame's like batting like 300, 500, batting like 750. It's doing pretty good. But I already know that that's not always going to be the case. Things happen in the overnight, right? Unexpected things. It's just bound to happen. We know for a fact that if you think If you're a market participant and you're young, or you are a market participant and you are young to being a market participant, I don't care if you're 50, 60, 70, you'll see trolls out there saying, well, look, that guy's wrong, right? You'll hear, they do it to ST short seller all the time, right? Oh, look, he was wrong. And this profession, this whatever you're going to call this for yourself, whatever it is you're doing out there, this is the wrong profession to be right in, because you're going to be wrong. You're going to be wrong a lot, a whole ton. It's how you manage being wrong, right, that matters. So what I'm thinking here is that, so this is the hourly chart right now from last night for QQQs. This is the SPY chart for last night for QQQs. This is the one that I posted for you guys last night. This is the IWM chart for last night. A little bit early in this one, right? Come down here, blast up, come back down, blast up, come back down, blast up, backed up, and then eventually upside move. Now, my thought here is that we're going to post these, or we're posting these, right? My thought here is that, my thought is that you're going to get these posted, and then what I'll do is I'll leave them up in the bottom left-hand side in a rotation, so we can see how they trade versus those projections. The other thing too here is, or on this, is that I think I've always made the statement that I'll make those posts as market briefs until they need to be updated. So you shouldn't always expect one of these. You shouldn't always expect one of these charts to be updated if they're still following the path that they're on. Now, let's say we wake up one morning and I don't know, like somebody fucking lit a fart on fire in LA or something. And so SPY is down to 300 points. You're going to get a new market update from me that morning before the open to see what we're going to do for the rest of the day. So that will be in there as well if that happens. But I think I want to at least start watching this stuff and seeing how close we are to those projections. If you don't want these, let me know in the chat, because we can. So you can see how close we are. I'm fascinated by it every morning. So every morning I wake up and I check. I'm like, oh yeah, fuck yeah, we're doing pretty good there. So matter of fact, I had one of the, and by the way, these charts are 1 hour charts, so they're for multi-days. They're like 2-3 days out. Sometimes these charts are great for the day, and then like in the day they just kind of start falling apart. And I'm like, yeah, you can see where they're falling apart. So if you're, regardless of their bull or bear charts, it's kind of neat to watch, because you're like, see, now it's falling apart, and we got to switch to become a seller and have to do a market update to reflect that. Okay, that's it for that one. Okay, so I'm going to delete this one. The reason I'm going to delete this one is because I got to put it on I have a bunch of TradingView professional accounts that I pay for every year. And I'm going to do it on a completely different account, so that I don't have to delete them, because I'm going from a 1 minute or a 1 hour to a 1 minute basis. Bear with me on this, because I got to do it on a separate account that I have. Actually, if you ever notice the bottom right or left-hand side screen, that's a completely different account that I'm using for those charts. It's technical. It has more to do with like, I have a tool that changes screens for me. So if I have that tool running, it would fuck with the other chart that I have above that you guys see. Okay. Hold on 1 second here. Long story. It's all technical shit. All right. Let's switch over here and take a peek. Whoop. Let's get right back over there. Let's go to the we're going to go where? haven't done this in a while. We're always getting rushed. All right. So for this morning, here's your SPY 1 minute chart. Just plugging away, grinding away. Oh, what's going on up there? Oh, this looks like the robots are in. What's that up there? See those? Oh, we got robots. See them? All that weirdness going on up there. The hell is up? Whoa, what's all that up there? Got some wild ass shit happening in the market. The robots are working extra hard today. So I put snow up. Sam was asking for snow, and I wasn't able to call him back to give him a shot on the phone. This is Sam, who spells his name S-A-H-M. And I already told you why he spells his name that way. If he's out there watching right now, if you guys see him anywhere, let him know that I do have snow up for him this morning. Also, on Wall Street Bets last night, I checked in with those guys last night on Wall Street Bets. They're on fucking fire right now about snow. So here's a 30-minute chart. As long as snow stays above 160.98, price target is to the upside. Nice little squeeze right here. Right? Big blood down move on SPOOs. Look at that violence. Violence. Nice little, this is the classic traditional V-shaped recovery. They got a new high right here. That's beautiful. Always like seeing this stuff, right? We do this every day here, right? I mean, look at that. Bam. You got to love it, right? That's gorgeous squeeze right there. Let's get back to that snow chart. So far, this looks beautiful. So what are they looking for next? They're going to be looking for another high right over there. Bam. And they're going to be looking for another one. Beep, right in there. And we'll leave one more up here. Right up there. So we're looking for that one right there. So far, snow looks good. As long as it stays above, again, as long as it stays above 160, I guess. I said 161.98, but I'll give the Bulls 160. They're trying to trade today 174.94. So we'll leave snow up for those Bulls. And I do realize that the Wall Street Bet gang is on that trade today. We also have Tesla up this morning. They're fighting to get above their daily trigger. Now, I'm going to give you a warning here on Tesla. I told you already 1,000 times that Tesla trades off its daily trigger and its daily velocity. Its daily velocity is bullish. Beautiful up here, right? Series of higher lows. Still in the negative right now. But that's where you want to be buying Tesla, right? You never want to be buying Tesla on plus 100, plus 50. You always want to be buying it on minus 100, minus 50. And especially its daily velocity shows a turn happening typically in Tesla. Now, one negative thing right now in Tesla is higher time frame velocity is extremely has been extremely bearish. So they've been teeing off on this daily trigger. You see them right here? They teed off on it. So what I would say to you if you're a Tesla bull is you want to see price, before you take a long here, you want to be seeing price get above the daily trigger and then just confirm a bounce off the hourly trigger and get a new high. It's that simple. Bounce off and get a new high. So you don't get hemmed into another down move on Tesla. I think we had a target yesterday of 182, and I think they got it yesterday. They got 184.33. So that's a nice target right there. They hit it. Now it's just a matter of getting above that daily trigger. So we'll keep our eyes on this trade as well as it develops. This price action I don't like. See how they're selling it down, selling it down, selling it down, selling it down. So I'm not a fan of this right now. As a matter of fact, let me come back to that trade right here. Get rid of this one, and you see this previous high right here. It's that 184. You want to be seeing specifically. So there's no trade here in Tesla right now. You ever seen a trade higher than that 184 and change, right? And you really want to be like at least holding that 181. Shit. Something like this structure right here, and you want to be seeing the hourly trigger underneath. Hold on here. You want to see that hourly trigger come up over the daily trigger. You want to see price come above. Retest the hourly trigger and get a new high. You want that new high right there. You want to see all of that productive price action in Tesla before you take the next trade to the upside. Until you see that, there's no trade for Tesla, I'll be honest with you. The target, though, on that trade is 209.60 on Tesla. 209.60. So we'll pay attention to this trade as well this morning. We've got NVDA up as well. NVDA is looking to close some gaps to the upside. I'm sure bulls are paying quite close attention to this. Another trade just like Tesla. You want to see price over the hourly trigger. It's not quite there yet, but it almost is. So keep your eyes on NVDA for a squeeze higher. I might bring up SMCI at some point for you. I'll read off to you what Vol Wiz was getting to. He's got a really cool trade. I'm not going to give the trade away. You should follow him to get the trade, but I'll bring up the chart and briefly overview what he was discussing. He's been discussing NVDA. He's been discussing SMCI. He's been on a fucking roll lately. Next up, we've got IWM down here, just ripping fucking faces off. IWM is like, fuck your charts. We're going to the moon. Now they're trading 210 right now, and now I've had a projection of us rolling down a little bit, but you can see the bullishness. We're over 210 now. There is no pullback off 210. Now they're fighting for 215 like today. Like, fuck you, we're going to 215. IWM is straight fire right now. I would not be shocked to see it fucking straight moon today. Would not be shocked. It is on straight fire right now. So be watching out for like a failure at 214.50. If we hold 210, if we're not selling like 209.50 for a pullback to go up and up and up, it could just be straight green fucking bars all the way up. It's possible. And that would infer a correction coming too. We know about the rotation from tech and from S&P 500 into IWM. So they might be looking for an early print on IWM. So just keep your eyes on that. So right here, 215. Would not be shocked to see that get tagged today. Wouldn't even blink if that happened. Q's grinding away, didn't really participate as much as SPY did yesterday. Grinding those Q's, looking to blast up and slam 450 again. Now we failed 450 back here. See it? Which we should have failed, expected to fail. But now they're trying to get above 450, right? So this is like the 210 thing. So right down here, whoop. This was an expected fail right here, but this time they are looking to go above it. So we'll pay attention there. And we're above right now the hourly trigger on Qs, right? So they're straight up trying to like say, fuck you, we are going to the moon, baby. boom right there, boom right there, boom right there, and then poof right through. 453. So Q's just like Q's on fire. It's just starting right now. Might see some outperformance by Q's this morning. Outperformance by SPY this morning. Reddit coming back down into these two buy zones. Reddit underneath its hourly trigger. No interest in trading Reddit unless it gets above 57.86. Until then, it's a dead trade. Do not trade Reddit unless we're above 57.86 if you're a bull. Hood, we've been watching this one, right? They smashed up into this box right here. They're now trying to smash above it. So Hood is above its hourly trigger, trading above. It hasn't given it up. It's just stayed above its hourly trigger. So this trade is dead under $19. Now goes to $20. Oop. So Hood still strong. Hood's still trying to smash above, right? New high they're looking for. Target above 2139. So Hood still strong. SPX. Let's look at SPX. There's something important for you to look at this morning on SPX. We're going to talk about SPX this morning. Let's go over and discuss some SPX stuff. We got some stuff to talk about. So, hang tight here. We have some important stuff. Dealer gamma is now up to 607, okay? The flip is at 5230. Support is at 5250. The target is 5275 and 5300. Let me switch over here again and mute this for a minute. Pause this screen here. And I got to tell you something that I have withheld from you. I haven't said it because I didn't want to get your hopes up. But this is very important, okay? And let's go down there and take a look at it. It's very important to discuss this. So, whoop. Okay. See this local resistance up here? You see the volatility right here, right? We got all this volatility. You know that we've been discussing a few key things here. Key things. Number one, bulls just kept buying fucking calls. They just like all week buying them, buying them, buying them, buying them. 5,300, 5,400, 5,250. No matter what anybody was saying, they're just like, fuck it, we're all balls deep in. All the doom, didn't care. Didn't fucking care. All this doom down here, fuck it, buy more. Fuck it, buy more. Fuck it, buy more. I shit you not, like just like buy, baby, buy, baby, buy. But we are, bouncing around in, listen close, this is a close point for you right now. We're still in this dog shit down here, right? Dog shit down here, dog shit down here. Messing around with the gamma flip, right? The gamma flip's been bouncing around, bouncing around, bouncing around. We're up or above the gamma flip, all that shit, right? Gamma flip's just going like this. While the bulls are buying all those calls, what we were not doing, that we are today, is showing strength while that call buying is happening. We got the gamma flips bouncing up and down, prices below it, just briefly above it. There's no conviction in price and gamma for that move up to 5,300. Now this morning, there is once again. There is once again. So, whoop, we'll get rid of that. We'll get rid of that. We'll get rid of this. Get rid of that. this local resistance begins to look like this. And you may be asking yourself, why? And it's because of where we are right here. Okay? If this local support, if this local resistance becomes local support, if it does, if we can hold this, if this becomes local support, intraday, we start looking to print that shit up there. And we are in positive gamma. So even though you might be calling for doom and gloom, I'm going to tell you two things. For where we are, dips should be bought. And we should grind higher. And right now, as long as we hold on to this 52.50, we hang on to this, right? You can see it right here, right? If we can hold on to this right here, they will grind the fuck out of this, and we will trade 52.75, and we will trade 5,300. Be aware of that. We are not in volatility. We are not in negative gamma. And if this shit holds, price target to the upside, 52.75 and 5,300. Now, I want to warn you of something. So that's the good news, right? I'm going to read something to you, and then I'm going to update the gamma picture this morning. I'm going to read something to you, and then I'm going to give you the bad news. The gamma situation. This is coming from Gamma Labs. Hold on a second here. I'm going to update the gamma here. The gamma situation improved markedly with the S&P 500 trading above 52.50 ahead of a long weekend. Options traders continue to roll contracts higher in anticipation of a move higher. And open interest is being accumulated to 5,300, the new target strike. At the money vol continues to be ridiculously low. But Goldman Sachs is warning again of some price action towards the closing auction. We would expect most of today to be relatively quiet. Spring break remains abundant. Zeros remain abundant in line with past few sessions. Watching end of day as we expect asset managers and rebalance type flows. Pension rebalance at minus 32 billion for sale will be taking advantage of extra liquidity on the auction. Whew. We want to point out that the rate hike expectations are almost back to square one pre-FOMC, but we also have to acknowledge this week's supply and government debt was well absorbed as foreign investors choose the safe haven over inflationary risks. We were also expecting not only pensioners to sell, but who else to sell? Foreign investors. And that they're not doing that. We also know that corporate types and retails are going to be entering the market as well, offsetting some of that pension selling. So there's like a mix of buyers and sellers here in the end of quarter. And I posted it on a market brief, the four groups, about a week ago. I'll try to dig it up this morning if I can. But there's a group of sellers, there's a group of buyers, and the foreigners were expected to be sellers, but they're not. So we'll pay close attention to this if we revert underneath 52.50. Okay, we don't want to be under this. We want to be above it. Even if we're above the gamma flip, you want to be here to be trading this, not down here. You don't want to be down here and being like, but bro, we're above the gamma flip. We're going there. You want to be above here. You want that fucking we're here, we're going there. Make sense? So for something positive for you, it's that we are above 52.50. Okay? And as long as we stay up here, we have a chance to actually trade 5,300. Now, we do have some resistance here, right? Do you see it? Right over here. A little bit of resistance right here. And can I make that yellow? And this is possibly the Goldman stuff, right? You can see them already trying to sell it down. Look at these candles. Look at these wicks here. This is the Goldman trade, right? We're going to set these bulls up. They think that they're going to be fine. They're going to 5,300. Buy them, no. Buy them, no. Buy them, no. I'm going to roll these bulls way down to the depths of hell over here. So I would feel even more confident if we were able to get above this. Trade this 52.60, 52.56. Get a new high. And then, bam, we go to the upside. So there's still a little bit of question here. Now, this is where the bad news comes in, though. And we're going to talk the bad news. Anybody that's a pro trader with us already knows this. If you're a pro trader, you already know this. If you're a supporter of what we do, I've already updated you on this last week. What you should see here is some form of range expansion. We already have that range expansion expressing itself right here. You can see it. Now, the idea here would be this. Let me see if I can go to a 1 hour. The idea here would be see, even down here at 50. The idea here would be that we're going to spend a lot of time buying dips. I don't know if I can get this on a higher time frame. Let's go to a 4 hour. Yeah, you know what? I'm just going to delete all this shit. We'll come back to it. Hold on. Because I need to express this to you. The idea here is that you're going to see attacks to the upside and then pullbacks to get there with my cursor, okay? So the idea would be here that you're going to see action like this. You're going to see an attack for 5,300, right? We're going to swoop back down, catch more support, and attack 5,500. Does that make sense? And then get a slow grind coming out into the late summer, and then a roll down for volatility into late summer, early fall for the election, a major correction. But I want you to realize that what you're likely going to get is some form of wedge here, right? And then a bloodbath down end of summer, clean all this shit up. And then you're going to see a monster move into the end of the year. All of this takes place in this zone here. And as long as this zone is not lost, you're going to see 5,300. You're going to see 55 and 5,600. You're going to see a correction off of that 55, 5,600. And that correction should only come down. Maybe at the worst, 4,900. But then you're going to see a fucking move like you're going to see a move, right? Like, let's say we go 56 down to 49, that's 700 fucking points, right? We're going to fucking run up into 6,000. Like, that's violence. Run up into 6,000 into end of year, March at the latest. This is all being built out right now. All of this is being built out right now. So just be aware of this 5,300 in the intermediate. And I would be one other thing. So that's the negative, right? Look for some violence, or not violence, but look for some kind of sell above a 5,300. But here's the other part of that bad news. If you are a bear and you think that you're getting 10% down, 20% down, 5% down, maybe. We'll trade it if it happens. But right now, it looks like they're trying to build some kind of a floor here. Get used to looking at 5,000, 510, 520, 490 at the worst. But start thinking on a scale about a year out, or not a year, 9 months to a year. Yeah. Think about the next 9 months, next year. As long as that 490, 4900 holds, it's going to be a springboard to smash to the upside. I want you to think of that too, because where we are right now, we're trading what right now? We're trading 52.15, right? You're going to look back on this and you're going to say, holy fuck, when we were down at 49, 5,000, 510, 520, I was on a 1 minute chart, now looking at the bigger picture. Because when you're trading that 5,300, then that 55, 56, then that 57.50, then that 6,000 or 59.60, you're going to look back down here and go, shit, they were springboarding it. I had 2, 3, 4 shots, and they were springboarding us up. Slam, right? Come back down, slam, punch up into it. And then, bam, we're up there at 6,000. And I showed you a week ago, or this past week, I showed you how we are not in a bubble. No matter what they fucking tell you on CNBC, if you want to see a bubble, that's 9,000 and 12,000. Right in there, somewhere in there, 9 to 12,000 in a matter of about a year or two. So when you hear people say we're in a bubble, I showed you the actual facts of what a bubble looks like. I showed you what those forward PE ratios look like on S&P 500 and where the S&P 500 would actually go if you wanted to see an actual fucking bubble. Now, if we do go into that bubble phase, if we were to run up to 9 or 12,000, that's when you'd see the pullbacks that are like 20%, 30% pullbacks. But you'd also see the S&P 500 go up 70% on that pullback, like down 20%, up 60%, down 30%, up 80%. I'm shit you not, like 80%. So when these people are out there talking to you about a fucking bubble, they either don't know what one is, have never traded one, have never looked to see what they are. We aren't even there yet. Now, if we do trade a bubble, if we trade a bubble, we'll talk about it. But they're very scary. You literally buy it and you don't look at it. You look for like an 80% up move. You scoff at a 30% down move. You scoff. You go, I'm just going to buy the fuck out of that too. 20% down. S&P 500 down 20%. I fucking sold my kids. Woo, up 60%. Rolls down for 30%. You know what? Fuck that. I'm going to sell the wife and triple mortgage the house now. I know that emotionally most people can't do that. And you're going to be telling people out there, well, I'm buying it because they're going up another 80% in the next year. They would think you're smoking crack if you told them that. Why? Because they've never lived through one. They've never been in a bubble. Now, we're not in a bubble right now. I'm sorry to break your bubble if you think we are. We are not. If you want to see a bubble, it is going to be above 6,000. Truly. If we don't roll this shit down at 6,000 in December or March, and you want to see a bubble, you'll see violent pullbacks, 20%, 30%, and you will see moves to 9 to 12,000 in a very short period of time. Now, I can't wrap my head around it. I'll be honest with you. I can't. I'm not predicting that's going to happen either. I'm just letting you know that you are not in a bubble. You haven't even seen a bubble. We looked at this as well on the, we looked at this in depth earlier this week, I believe on Monday or Friday on the show in the morning at the start of the show. I think it was Monday morning at 9:30. If you want to go back and watch that, you can. Like if you really want a bubble, dude, we're not even near it. Not even near a fucking bubble. You want to see a bubble? That's and the bubble trade is like 98 to 2001. And then the GFC, we have two of them in recent history. We actually have three of them, but we have three bubbles we've traded. The first one would be in recent memory, 2000 or 98, or we had the first run from like 95 to 98, then like 98 to 2000, 2001. Then we had the 2000 bubble. Well, we had four of them, I guess. Then we had 2000. Well, the COVID really wasn't a bubble run, but we have 2000. Yeah, I guess you could throw that one in. So you got 2000, 2007, 2008, and then the COVID bubble. And we haven't even done that yet. We haven't even done all the COVID shit yet, or not in full. So, could we do that again? Any of those three examples in modern history? Yes. There's some old school. I'll try to bring this. If I can find this again, I'll bring it to you guys. But I was recently going down the vol control. I was recently going down the vol control hole, and there's some dudes from the early 2000s that were pushing out white papers, like the late 90s, early 2000s, and very smart. These are smart. These are academics. And they were discussing vol control back then. And their point was their posit is that when you perform volatility control in modern monetary theory, that in fact you have more wild swings due to it. It's like an effect of it. And you actually saw that take place in the 2000 bubble, the 2008 bubble, the COVID bubble, where over time you begin to lose control. Start to see more violent moves up, more violent moves down, while performing vol control. It's like an unintended consequence. It's very similar to like the butterfly effect and stuff like that. Bats its wing and then fucking like across the ocean, it's like a fucking tsunami. At any rate. Okay, so as we approach 5,300, as we approach 350, I would not be shocked to see a trigger moment, right, where we sell and we're heading right down south again. But I am looking to buy that dip to trade 5,500 for summer. So if you're waiting for a dip to buy, if you were like somebody that missed the entire Q1 run, you're likely going to get a chance or a stab at some kind of a low to buy. I just don't think that low for you to buy is going to be what you think it is. I think your best bet is 4,900. I think you're likely going to be buying 5,000 or 510, 5,100, 5,000, and that's going to be your summer slow summer dip buy. To trade 5,500. By middle of summer, somewhere in there, and then a nice big fat fucking roll at the end of summer. You'll start to see the politics come out. You'll start to see the market trade with Trump talking or Biden talking, any of that kind of stuff. Now, all of these things I'm talking to you about do not include unknown shit to the market. Don't be adding me if we go to war with China. Be like, oh, dude, you didn't see that. You know, don't be adding me if someone's incapacitated, they can't be the president anymore, or, you know, any kind of weird shit going on out there. Anything that I don't know, you don't know, the banks don't know. The same thing goes for, like, let's say the war ends in Ukraine and we go to the fucking moons, 300 points straight up. Don't at me on that shit either. Exactly. Anything unknown, don't at me. I know. Well, I know the day that happens, they're going to at me. You're like, hey, yeah, fuck you, CaptainJimJames. So what would be the key points here? We're at end of quarter. What are the key points? What are the key things? Hold on a second here. What are the key points right now? 1, GS wants to sell, right? 2, we're in pause gam, right? 3, market's trying to build, just right, shitty M. Market is trying to MB a base. MBB. Market's trying to build a base. Right around 5,000. That's what they're trying to do. 4. Anywhere near, and we're near it. We're kind of near it, right? Anywhere near 5,300 or 5,350. Market is ripe to sell down. Okay? And what would be the last thing that we did not discuss yet today? The JPM collar. Why do we want to discuss the JPM collar? We want to discuss JPM collar, not because we trade to it or not. We want to see the true insight into what the banks think we're going to trade. We want to know, regardless of the bullshit, and just so you can see this here, we had a new high. You see that? We got the new high here. See it? Right there. Got it. Got it. Let's look at our pivots. Oh, look at that. Keep our pivots up today. R1, 524.43. Keeping a highlight on 525. R2, 525.68. R3, 528.15. Spoos looking to squeeze. Trying to get above. Make a base. R1 target 524.43. So the last part would be this JPM collar. 1, because we want to see what they're thinking. 2, because we want to see what other people are going to copy trade it. And what sentiment truly is in the market. So I trade, or I invest with JPM, right? JPM will tell you something in public, and then they send me something different via a note. Like, this is what you're doing. I'm like, okay, what are we doing? He's like, this is what you're doing. I'm like, okay, we're gonna do that. And then I'm like, why is Marco out there saying all this shit right now if you're telling me something different? So we're gonna find, you get a chance here today if you're a retail trader to see what the banks think. You want to see what their thesis is. Right there, leave that up for you right there. Ooh, look at that. Hourly trigger is going to the pivot point. Let's see if I can jump in on a trade with you today. I promised myself I wouldn't trade today, but I would love that one right there. Let's see if I can get a nice quick blutter. All right. Give me one quick second here. Whew. Oh. Nice. A fucking trader podcast is talking about popping the collar twice in a row. Elk's out there swimming this morning, I can see. All the usual suspects are out there. Pelk just said this morning, he says, as soon as the JHEQX lifts the lid on the collar, pin pressure should be released. I'm going to repost that one for you guys out there right now. Month end, quarter end, rebalance. There's going to be lots of cross currents today. Price action may seem weird. Trade with caution. Oh, baby. Andy Constant out there swimming today. Everybody's swimming. Everybody's swimming today. JHEQX, baby. Andy Constant out there. All the usual suspects are out there backstroking. Then you got the other people out there going, it's all bullshit. Fuck the JPM collar. It means nothing. But it will be watched. Now, I will say something on that, too, is like that top strike, man. Like that top strike can fucking fuck with the markets. Everybody's kung fu fighting. Yeah, I think if you get the top strike is like 53.50, that's fucking bad. Market will go red bar straight down. Top strike 5,500-ish. Market okay. Who said that? Puck said 19 hours ago, I would appreciate 53.50 in April. Oh, hold on. The JPM quarterly put spread collar. News you can see is always 80 to 95% put spread versus whatever call Makes it free to trade. Hell yeah, that's vol signals. The roll, baby. End of month NOQ flows. JPM Collar roll, Vanna and Charm flows come back. PCE and core PCE tomorrow. Good macro data today and the 3-day weekend into April. A seasonally strong month. Point blank trading saying SPX zero date open interest, quarterly expiration. Most puts are below 52.45, mainly below 5200. Most calls are above 5250. Biggest put wall 5200, 5100. Biggest call walls JPM caller 5015 and 5300. JPM caller roll this week. The current short call is 51 or 50.5015 and well in the money. They'll roll this Thursday and dart throw. We close the week around 52 SPX, 5206 SPX, 5250 SPX. My lean is 5200. So if we ballpark the weekly close there, 5200. Vol signals this morning saying the JPM collar is generally the most over-discussed trade in the SPX. That said, it does provide a tremendous opportunity to understand the mechanics of dealer hedging and trade, dynamic dealer hedging, vol surface impact through time, and much more. 100% bro. 100%. That's all I can see here. That's all I can read right now. What's that? I'm reading to you guys posts right now. What are you guys saying? Sorry about that. I'm reading a bunch of posts from I'm missing a bunch of what you guys are saying right now. I'm reading a bunch of Twitter. This is all stuff from Twitter over the last 24 hours. Check my DMs. I will post PDF. What secret? What are you guys talking about? Secret? I don't understand what you guys are talking about right now. I'm missing a bunch of what you guys are saying in the chat. Hold on one second here. Who? When did I tell you it was a directional bet? When have I ever said that the collar is a directional bet? When have I ever said that? Well, I'm fully aware it's a bearish seagull. I know everything about the collar. What are you trying to say to me here? Check my, huh? No. Okay, I get what you're saying now. I get what you're saying now. I understand what you're saying now. I get it. I get what you're saying, Sigasic. I'm talking about sentiment change from market participants. That's what I'm talking about. Oh God, here we go. I'm I'm going to hit myself in the forehead here. It is a hedge for their underlying ohm. Yes, 100%. It's a hedge on their underlying ohm. As a matter of fact, it's one of the most inefficient ways to hedge their ohm these days. There are actually better ways to hedge yourself, but that keeps working for them, so they keep doing it. Read a folder in the general chat you posted in the Discord. Let's see here. Hold on 1 second. Oh, yeah, you're not coming down for me, are you? You're just going to squeeze it. You're going to fucking squeeze this. You know, if we trade 525, my fucking put hedge is dead today. I got to close that shit by the close today. Let me go to the Discord. Hold on here. That's right. Price matters on how they place the trade. Absolutely. Wherever price is does matter in the trade. He's saying it's not a trade, it's a hedge. It's called a bearish seagull. It's a bearish seagull. It is a trade. It's not a hedge, it's a trade. It's called a bearish seagull. You can look it up. If we hit 525, I need you to play my music. It's called a bearish seagull. It is a trade. It is a hedge, but it's also a trade. You can just Google search it. It's called a bearish seagull. How it may or may not affect market movement. It can affect market movement, absolutely. There are magnets within the collar, and there's actually repelling action as well on the collar. Do you guys understand the second idea behind the collar as well? Okay, so let's talk about the collar for a minute here. We got a lot of like crisscross talking here. So the JPM collar is called a bearish seagull. You can look it up on your own, okay? Just Google search bearish seagull. Do you know the second reason for why this collar goes on and why other banks put this collar on the market? Do you understand the second reason? There's more reason than just one. It's also to tame volatility in the market. The intent behind it, not just them, but other market participants, is to limit upside and downside movement in the market, to lend more stability to the market for returns for banks, for their clients. And there's an effect that happens on the market due to them placing these trades. They're copied by other banks. They're copied by retailers. And it's meant to like limit upside and downside movement. That's why when you hear Andy talking about magnets and repelling, or Gem or any of those guys talking about that stuff, does that make sense too? So if you're a bank, right? Or let me simplify it. So there's markets like this. There's markets like there's markets in South America. There's Western African nations that have real price discovery in their markets. You'll hear people talk about, we should have real price discovery in the United States on Wall Street, right? We should have true price discovery to see where we go. What happens is, let's say if like 10 people trading, I'm going to fuck this up. You're like 10 people trading, right? And you have real price discovery. You'll have like whiplashing effects on the marketplace. And eventually only one person will have all the money. And then the market will collapse on itself to the downside because I'm the only person with all the money, right? I don't know if I said that exactly right, but you don't want ever true price discovery on the market. It never ends well. It always ends in disaster. So functions of this trade is to dampen volatility. Now, some of you might be like, "Oh, we had volatility in 2022 cap. We had volatility in COVID trade cap." A lot of that stuff was brought back, though, wasn't it? A lot of that trade was brought back. Return to the scene of the crime. When you're talking about the kind of volatility I'm talking about is like Nigeria has had markets like that. If you ever look at the Nigerian market, they've had moments of true price discovery. I forget the country in South America that has that, but I don't want to misstate the country. But they have a true price discovery stock market, and it is fucking wild. You're talking about your dollar going from being worth a penny to being worth $30, or I don't know, fucking 15 pounds or something. I guess it wouldn't be 15, but it'd be less than that. But you get what I'm saying? I think it could be Chile. I don't want to misquote the country, but the point being here is that if you are GS, if you are JPM, if you are, you fucking name the bank. You just name it. If you're any of these banks, right, you're trying to give your clients consistency in returns. So if I'm trying to sell you a product and manage your money and collect the fees from you, I want our market to be as stable as possible most of the time. That doesn't mean bull market either. It just means consistency. So if we're in a bull market, I can bring consistent returns to my clients 9 out of 12 months. If we have a down month, I can say, don't worry, I was hedged, right? I can also bring you consistent returns month over month over month, year over year over year. If we go into a bear market, they can do the same thing in the inverse, right? I don't want to be having a client. I don't want to be JPM be like, hey, bro, let me show you our returns here for the last year. Last month, we made our clients 7,000%. And the next 3 months, we lost 5,000% of that. We went up another 10% the next following month. Then I lost 1,900% of that. And then we went up another 50%. And then we're now at 20% on the year. You see that? Like you don't want that at least in our markets, right? We're the leader of the free world. We are the reserve currency. So stability is key. And a lot of these hedging actions impact that in our country, in our stock market. All right. Squeezing higher now. They will force you to chase. Look at this. They're just going to make you they're just going to grind this shit up. Your P&L? Yeah, exactly, right? Good. It's a fair point, right? There's no vol control on our P&Ls, is there? Nino, if you're out there listening, I'm going to catch up with you this week, brother. We're going to have a talk, man. Just sit down and talk, brother. Trading 523.58. Price still above the 1 and 5 minute trigger. Just grinding. I'm looking for some kind of like a bloodbath here for just 2 seconds to jump on board. I don't think they're going to give it to me. I'm losing my fucking voice. I need 5 minutes. I got to take a quick 5-minute break. I'm just going to stand up, pump some weights, take a piss. I'll be right back with you guys. That's what I'd like to see. Just a quick little rip down. It's like somebody throws a hedge in the market, boom, blast up. Boom, blast up. I want to see that 5,500 so bad. I want to see that 5,500 so fucking bad. All right, back with you guys in just a couple minutes. Hey, David, I'm going to post that on Twitter, brother. I know you're not on there right now, so. Someone was asking me about Mister is bleeding. Oh, let's go over it. And someone's asking me about MSTR. I'm going to bring up MSTR for people. Oh. Make sure that you're getting up and doing your push-ups and your sit-ups. Hit some weights really quick. Take a 5-minute break. Just grinding higher, baby. Grinding higher. Big green balls out there. All right, I got to do all that stuff. That's all done. All right, went into Discord for a minute. All right, where do I got to go next? All right. You guys can still hear me, can't you? You guys, like, I should have, like, a second microphone so you just hear me talking to myself in the background. Blah, 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 blah.
Georgia, Trump's legal team is calling for the dismissal by claiming the former president's political speech.
Yeah, do some curls, do some push-ups right now. Do some fucking push-ups. Get up out of your chairs.
Tried to get Fani Willis removed from the case over
Get off your couch at home.
Relationship with the special prosecutor.
Get out of the executive bathroom.
Vetoed a United Nations resolution today that would have renewed monitoring of sanctions against North Korea over its nuclear weapons and ballistic missiles programs. The veto comes as U.S. claims intelligence shows North Korea has transferred weapons to Russia, which Moscow has used in its war with Ukraine. And the iconic Life magazine is getting a relaunch. Venture capitalist Josh Kushner announced today he and his wife Carly Kloss will bring Life back to regular print and digital distribution. The deal with Barry Diller's company is being conducted through Bedford Media, the startup that Kloss leads. The price was not disclosed, Sarah.
Thank you very much. It's old is new again.
Yeah.
Silvana. Former Yahoo CEO and Google executive Marissa Mayer joins us next with a new startup and her take on Alphabet's AI issues. Money Movers, back in a moment.
Does that work? I think that works. Bueno, bueno, give me a dip by. All right. Oh, you just came from the gym. Congratulations, you lucky dog. Reddit bleeding out right now. Reddit bleeding out. It's underneath its hourly trigger. Q's grinding. IWM blasting. NVDA being rejected above at 910. Tesla not doing it. They're rolling Tesla right now. Told you no trade on Tesla until we get above, and it's bleeding right now. It ain't looking pretty. Snow must stay above 162.05. Trying to smash higher and higher right now. Be careful of a roll in the marketplace. Yeah, we use old gym bros and young gym bros. Young gym bros, old gym bros. Those are sellers. Those are weak sellers and strong sellers. Young gym bros don't do any leg workouts. Old gym bros work the entire body. All right, I'll be right back. Note right now too. Remember, 11:30. We've got a bunch of bill auctions this morning.
Watch Palantir today. Manes Crespi downgrades the stock to sell, saying it's time to get, quote, back to reality with the valuation now hard to justify. Price target goes down to 20, I think, shares. You just on the heels of your amazing interview with Carp a few weeks ago.
It's been
I'm going to put MSTR up right now.
Over the last 12 months, burning those short sellers.
Yes, and their habits, so to speak.
Alex Carp was happy to do.
Meantime, a new AI-powered app is on the market that's time for photo sharing. Sunshine, a new startup helmed by former Yahoo chief Marissa Mayer. Deirdre Bosa joins us this morning, today's Tech Check, with a very special guest. Hey, Dee.
Hey, good morning, Carl. That's right. We have Marissa Mayer herself. Welcome to One Market. Thanks for being here.
Thank you very much for having me.
Congrats on the launch, which was earlier this week. I want to start with a very simple question. Why photo sharing? You said that it's broken right now. How's it broken? What are you trying to fix?
I think photo sharing is broken because when you see someone take a photo, you might feel like, hey, I need to pull up my phone and take it too, or remind them to give it to you. And the thing is, you're there. It should be easy and fluid to be able to move photos around. And right now, it's just not. If you think about the number of times that you've taken multiples of a shot or pulled your phone out. And so what we really wanted to do was take AI, apply it so you get good photo curation, you get easy sharing. We have something in the app called Magic Mode where we decide which photos are share worthy and upload the ones that we think will be interesting to the group of people who were there. And we really base all of this around a time and a place. So if you're in that time and a place, you're part of that album, the photos get shared really seamlessly.
Right. You have an extensive history in AI. I know you studied it at Stanford, and then you went on to Google and were focused on AI long before anyone was talking about it. This is a real moment, especially for generative AI. A lot of the startups that we talk about on a daily basis, they're trying to do very complex things, like build the large language models, or for example, build software on top of GPUs. You're using it for a lot more simple stuff. Photos is one. You're also doing something with contacts and birthdays. What is the strategy? Why are you focusing on some of these more like mundane tasks using AI?
Sure. Well, we have all the respect in the world for those really cutting edge applications, but we think that AI is also at a moment where it can help in everyday tasks. And when you think about simple things that save time, finding someone's contact, making it easier to share a photo or having that happen automatically, picking the right photo. Those are all things where, yes, if we can do global facial recognition, we can figure out which photo has the best expression and eyes open really easily too. And so we want to take AI, apply it to those things because it's good at it, but we also think that it really makes AI very relatable in that moment. It's something that people can feel, they can understand how it helps them. And it demystifies AI a bit.
Right, and a lot of the people I talk to here, they talk about this future vision that generative AI...
So here is Mr. MSTR, MicroStrategy.
I'm still waiting for that moment.
Right
but
here.
The vision is like an
Here,
AI
here.
assistant or an AI tutor for every child. When do we get there, and does Sunshine sort of play into that idea? And how does that work? Is it going to be through our phone? Is it going to be through a different device?
Sure. Well, I think there's a few different things that are happening.
You want to know what I think?
Like, how does the AI express itself, speak on your behalf, act on your behalf, draw on your behalf? And then there's all the personal information. And I will say that's where Sunshine is really focused. We're focused on how do we take the personal information, make sense of it, pulling signatures and contacts out of your email and making them useful to you, finding the great photo that you should have sent your friend and making sure that you do and giving you suggestions and reminders. And so I think in the future what we're going to see is those pieces that understand personal information really meet up with that expressiveness of being able to act or write or draw on your behalf. And that's really when I think AI is going to become even more powerful than it already is, which is, it's already an impressive moment. But I think once we'll start to see the types of agents and assistants.
Bearish on MSTR.
Two pieces meet.
You've obviously worked for some of the biggest tech companies
Bearish.
in the world, and now you're starting from the ground up as a startup. But when we talk about being that assistant, having access to our lives, our data, no one has more of that than, say, a Google. So how do you compete with some of these large tech giants that have been around for decades and have access to all of this data?
Sure. Well, I think that it starts with a lot of focus. What are the areas where you think you can add a lot of value? And you're not going to be able to necessarily compete for the amount of data, but there are different ways of accessing it. So, for example, our Contacts app, we're allowed to OAuth into, with a user's permission, into Gmail. We can also do it with Yahoo and Outlook and other emails. So you can get access to that data with a user's permission, and that's really what we focus on. And then it's really about what's the core problem you're trying to solve for the user, and how do you build a solution that really makes it easy, time-saving, and simple.
Right. Now, before we start talking on camera, we were talking about, why not work on a large language model? Why not work on that sort of foundational AI? And you said barrier to entry, right? And
Sure.
We're certainly seeing that. Like Microsoft, Google, Amazon, they're making these huge investments. They have the compute power. They have the billions of dollars in capital to lead the next generation of AI. I wonder if you agree with that, if you think that there's space for startups versus these colossal giants.
I think there definitely is a barrier to entry, and LLMs are very interesting, but I also think that there's an advantage of being a startup where you get to look at all the different models being developed by the tech giants who are making those investments, and there's, generally speaking, APIs that allow you to access the right model for the right task, and being able to find that the right offering, the right API, and the right model for things really matters.
Last question for you. There's been a lot of talk.
There is MSTR for you.
They started with the technology, the talent, and there's sort of this thinking, at least in the markets, that maybe they're playing catch up now. Where do you think they are, Google? How do they get back ahead? Are they falling behind even?
Well, obviously, I have a lot of affection and respect for Google. And I think in AI, it's very clear they have an amazing roster of talent. And, for a lot of us, they have a lot of our personal information. So when we talk about that personal information, understanding it, meeting up with the ability to generate tasks and actions through generative AI, I think that Google is in a really advantaged position, both because of the talent and because of the data that they have for people that they can put to use.
Right, so don't count them out, which I don't think anyone is, but there's a lot of chatter in the markets. Marissa, thank you so much for being with us.
Watch out for a roll in the market. There's tickets getting blasted right now.
Pass it back over to you at the end. Nicely.
Great stuff, Dee. Thank you. That's our Deirdre Bosa this morning. Watch Walgreens today, narrowing its profit outlook. The CEO sat down with us a moment ago. We'll get some sound from that interview in a moment.
Wealth.
As we await official confirmation of former FTX CEO Sam Bankman-Fried's sentencing today, let's bring in partner at law firm Mintz and Gold, Ira Sorkin, formerly Bernie Madoff's attorney. What do you expect, Ira, to happen today? Oh, you know what? We lost the guest, but I think we can confirm now that he was sentenced to 25 years in prison. This in a New York courtroom. Working on getting our Kate Rooney there, but obviously this is unfolding as we speak. There were questions as to how much he would get. This is the judge, Judge Kaplan, which is making this decision. Bernie Madoff got 150 years, 20 years, I think was around expectations, 25 years, around what we were hearing from some lawyers, including Jacob Frankel last hour.
Jacob Frankel was thinking in 25 to 30. There was a flash head a moment ago from Reuters that said 20. It's now been corrected to 25, but it does come on the heels of a statement from Bankman-Fried in which he said he made a series of, quote, selfish decisions while leading FTX, quote, threw it all away. It haunts me every day. And at one point, Sarah reportedly said that the useful part of his life is now over.
And just as a reminder, last year, the jury found him guilty of stealing billions of dollars from investors, FTX customers, defrauding investors and lenders because of his crypto firm, Almeida Research. Today was the day where the judge would hand down the sentencing. And as Kate Rooney said in the last hour, unusual to see him come in the tan jumpsuit from jail, sounding very different, saying he's sorry. I think our Kate Rooney is here with us now, who can tell us more about this 25-year sentence. Kate.
Yep. Hey, Sarah. Yeah, so we just got out of the courtroom. 25 years plus 3 years of a supervised release. Judge Kaplan going through his reasoning behind a lot of that. And among the things he talked about was Sam Bankman-Fried's perceived lying on the stand. He talked about him knowingly committing these crimes, going up and brazenly lying on the stand. That did factor into this. He did talk about some of what the government recommended and said that was about 40 or 50 years. He said that was overkill, essentially. He said that was not necessary in terms of deterrence. He talked as well about, hold on, Sarah, sorry, I'm getting my notes here. Okay, he talked about some of the messages that Bankman-Fried had sent to reporters at the time, and the F regulators line came up. He said that showed essentially that he was gambling here, that he had this expected value of the outcomes of running this business, and he said the error here was miscalculating the risk.
Damn fucking charts that are.
He said he knew
rotating charts. Okay. Trying to word this better. Okay, so hold on here. A couple things.
He also went on to talk
Pay attention to here, okay? Really quickly.
His pithy.
It's not really dragging. That's poor words. So IWM, right?
In his 30 years on the stage,
IWM's strength is stopping the market. Like I'm watching a bunch of tickers get blooded. Oh. Hold on here. I'm like trying to word things in the chart. Change that. Okay. So I'm watching individual tickers get blooded, right? Like boom, knock you off. Dude, why is it still going? I just hit the red button. But you can see down here, this is IWM. And you see how IWM is just blasting right now. I want you to think about that because you're not getting the outperformance by Qs or SPY. And it's being dragged up, right? Where you'd think SPY is going to blast down to the depths of hell. You're like, well, look at that ticker over there. It's getting blooded. That individual ticker over there. But small caps is like, nah, fuck you. We're going to drag you up with us. You know, we're going to hold this market up. So anyone out there looking for like a crash or some shit, right here, IWM. It ain't going to happen with this kind of shit. Does it mean that Qs and IW and SPY outperforms? No, but it does show right here that they ain't going to let you, at least at the moment. The market's not going to go down with small crappers. Russell Crowe just going, no, you're coming with me up here. So as long as that keeps happening, as long as you keep seeing this, because some of these companies are also included in the S&P 500, right? So as long as this thing's still doing its thing, you can see that the difference here. Like SPY is just like grinding. Yeah, we know IWM. We know. Right? Meanwhile, IWM is just like moonshot, straight moonshot right now. So I don't know if I get this down here is my point. And you can't really look at individual tickers and be like, yeah, fucking SPY is going to crash because of this and that and whatever. Because this shit is just straight mooning right now. Look at IWM just blasting off here. How's AMC and GME doing this morning? I wanted to ask you guys about that too. Let's get rid of NVDA. I wanted to. So last night I was reading about GME, and I'm reading two different articles. I'm reading one article. This looks bad. GME. I got one person yelling in my ear saying they're finally showing profit. They did everything they were supposed to do. They closed all these stores. Things are looking good for GME. Then on the other air, I got another article telling me. Another article telling me what? The other article's telling me, oh, sales are down on GME. It's bad. So I'm just like, why am I getting these two different things? So GME down this morning, blooding down back into its $12 range. You guys want to see AMC too? We got all the memes up this morning, don't we? We got Hood, Reddit, GME, Snow, MSTR. What else? This looks really bad down here. We got the memes right next to SPX Gamma. Love it. Fucking love it. AMC. Oh, shit. AMC, baby. Oh, no. I could have told you that. AMC. Let me tell you guys something about AMC right now. Was anybody bullish on AMC here? If you were bullish on AMC, dude, yeah, perfect sell on the daily trigger. Just fucking straight shanked it. I would ask you to reach out sometime. And now don't quote me on this, but there was a moment with either AMC or GME. There was a moment on AMC and GME where there was some event that was coming up on one of these two companies. It could have been 6 months ago or 9 months ago. It could have been about almost a year ago. And all the talk was that one of those two tickers was going to moon. And that was the thesis by everybody. And Scott, Volwiz, and I were talking one night, late night. We had a few beers. Oh, shit. Sorry, Jimmy. I'm getting yelled. Why you guys are all yelling at me this morning? I got David yelling at me. I got Seagus yelling at me. I got everybody's yelling at me. I got people screaming at me all morning. Jimmy's now yelling at me. Wants Dixie up. There you go. There's Dixie. Looks kind of bearish. The la 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 42069 is yelling at me. So anyways, point was this. Scott Volwiz, right? Now he's I love you guys too. I love all of you. So what up, short seller? How are you, brother? Good morning, my man. Good to see you, brother. How's the house coming along, short seller? We gotta get some pictures together when we have you in the show finally. So I gotta tell you guys something. This is a really important thing. I know you guys follow some specific people on the internet about these meme stocks, especially AMC and GME. And I think they're all really good. I got no like beefs with GME Furus or GME Bulls and that kind of stuff, or AMC. But I will say something to you that's important. Scott, you know Vol Wiz? He is an actual market professional. He has done some big work for hedge funds over the years. And he went to a really great finance school. This guy's a badass in real life. So every time there's like an event that people are bullish or bearish on AMC and GME and companies like that, we'll have like a late night conversation, and he'll be like, oh yeah, he's like, all these guys are fucking super bullish right here in this fucking event that's going to take place. And then he explains the actual mechanics of it and what's being done in the background. And he actually knows where the price is going to go up or down or whatever. So my point here is, if you are a GME or AMC bull, if you ever looking for like an event like this AMC bullshit,
March 20,
you should be reaching out to him on the side and just be like, hey man, can I beg you right now to explain what's going to happen? And sometimes what he says is opposite of what the prevailing thought is. I shouldn't say sometimes. Whenever he gives a counter argument to whatever the standard thought process is, he's right every time. So I would say pair him as a person out there on Twitter. If you're a meme stock trader, I would pair like Scott with whoever your favorite GME furu is out there. Yeah, that's bullshit on Sam Friedman. I bring him on all the time. I bring him on the show all the time.
Protect your trades from massive.
You know what's more disgusting about Sam though?
Now
is his dad
a year for our
and his mom.
Service.
And what's gross isn't even them. It's like they're all tied into the fucking Senate. Like it's one big whole cabal. It's like the fucking MMT like cult. It's all tied together. It's a very small group of people. It's not that big of a group of people. Like it's like the greatest stock traders in the world. You know, they're all together. The great senator from Massachusetts and her husband. You know, Pelosi's husband, like Friedman, like his whole family is like wrapped up in that shit. Volatility was Vol Wiz. Comes on the show all the time. It's part of the network. He's a cool guy. He's great on late night too. He does all kinds of questions about movies and shit like that, music, and cool guy to just know. If you ever want to follow him, Volatility Wiz, Vol Wiz. Look up Vol Wiz on Twitter. I mean, he does some really cool shit. So anyways, find him. Yeah, they're all connected. They're all fucking connected. Look up who his mom and dad is. It's like gross. It's like, the whole thing is gross. The whole thing is like just straight, pure, disgusting. 25 years isn't that bad either. He deserves life. He deserves fucking life. Yep, Volatility Wiz. Look him up. Okay, I'll be back with you guys just a bit. Uh-oh, what's this?
25 years in prison. And
here we go.
Got out of the courtroom. Some of the color behind the judge's reasoning when it comes to that sentencing, he had his guidelines, which the maximum sentence was 110 years. It was up to his discretion, and some of the reasons why he said he went with 25 years was deterrence in big part. He talked about the essentially PR campaign that Sam Bankman-Fried went on, pitching the media, pitching people, and he said this demonstrates he knows how to do this, and the will is there in terms of doing this again. He said there was a risk this man would be in a position and would it's not a trivial risk that he would commit more crimes in the future. He did say that the 40 to 50 years that the government had recommended was too harsh. So 25 years is in the ballpark of what a lot of legal experts were expecting. He did say on the, up there, though, Judge Kaplan said he's been doing this for more than 30 years, said that was one of the most eye-popping performances, as he put it, in terms of Sam Bankman-Fried's ability to evade questions. He was splitting hairs. He was not honest. So the fact that he, according to the judge, perjured himself on the stand did factor into that sentencing. He said he lied up there multiple times. He knew what he did was wrong, and it all went back to his worldview of expected value and gambling. He said he took a chance here in committing this crime and just gambled the wrong way, and he got caught. And that was the judge's argument.
Oh, it was worse than that.
He went with a 25-year sentence. We are awaiting, Scott, the parents, Sam Bankman-Fried's parents, Joseph Bankman and Barbara Fried, to leave the courtroom. They've been here throughout the entire criminal trial. We do expect them to be walking out of the courthouse. The next step here is a potential appeal. We do expect the defense team to file an appeal, but you have to wait for sentencing for that to happen. So that is sort of the next step in this saga, but a long road to an appeal, and legal experts I'm talking to say that it's very unlikely in this high profile of a case that they would have a successful appeal.
Kay, we appreciate that. Kay Rooney outside the courthouse, really just a few blocks from here. We'll come back to you, of course, as needed, as we wait for more developments from Lower Manhattan after that sentencing of 25 years for Sam Bankman-Fried. Forgive me for interrupting you, but we needed to get that news out, and we're probably going to have to do that again, so bear with us here. You were cooking, continue to cook.
Last thing I want to say on this topic, the reason I ask, what are you going to do during the inevitable correction, is the following. From 2002 through 2021, you basically had this 20-year period where the average, about half the time, you had that decline that we're talking about. You had a 10% dip in 50% of those years, and the average pullback was about 15%. So worse than just a correction, but not quite a full-blown bear market.
Okay, what about the other 50% of the time? Tell me about the other 50% of the time.
The pullback we've had so far this year was 1.98%. So we haven't even been able to have a 2% dip. The market, quote-unquote, bottomed for the year on the third trading day on January 4th. And that's really been it. You got a VIX at 13, and you really haven't been tested. You will be tested. What are you going to do when that moment comes? Ask yourself now and answer it and write it down if necessary. But you will be challenged.
Nothing. You're not doing a fucking thing. If you were long since October, it doesn't matter.
It would be historically very unlikely.
The question, Shan, to Josh's point is when will that challenge, if you want to use that word, happen? And does it happen sooner than we think? Because, you know, you still have a view, as we learned from our Delivering Alpha investor survey, that
right there, that's 6%.
Pullback, that the market
6%, 490, 6%, 6.7, 6.27%.
In the whole equation as well.
Well, I think there was some expectation, Scott, that we would see some the potential for this pullback in this period between the end of earnings season and the start of 2Q, right?
What do you care?
Because obviously we've received, I would say, a more dovish tilt from the Fed, and so that created some confidence in terms of the market in where we're.
Oh yeah, there it goes, baby. Come on down. Come on down to Captain's used call lot.
Catalyst for such a pullback. There might be fatigue. There might be sort of factor rotation.
I mean, I agree. There's going to be a correction.
Idiosyncratic to.
You need to go back to Kate Root.
But what about the other 50% of the time?
Chance for an appeal. Is that the next step?
It's like 50% of the time we do 10%, maybe 15. What about the other 50%, Scott? We don't want to talk about that.
Anything to say to customers and victims here?
There you go. Yeah, 490.
Way more time.
Any comment?
490. That's 6.3%.
You guys here on the clawback.
These fucking guys want 30% right now.
Anything to say to FTX customers?
We want a stock market crash. Scott's not saying pullback or correction. That's not a correction. You guys want to know what a correction actually is? I'll show it to you. Hold on here.
We didn't.
You want to see what the correction actually is? I'll give you the targets today. You want the targets today? Give them to you today. You ready? Pretty easy.
Legal advice as an attorney.
If you're a pro trader, you already know. You don't even need me to tell you where it is. You ready?
Feeling today? How are you feeling today?
Oh, wait a minute. I'm going to
Feelings.
This is Dad talking.
Do you think that this trial has been
Has this been a fair trial?
No answer from his dad. His dad looks sad. He shouldn't be sad. Yeah, we'll talk about that later.
Oh, hi, guys.
475 is a corrective move.
Leave the courthouse. They're walking down here on Ward Street in Lower Manhattan.
421.
From the parents, Joseph
corrective move.
He's a lawyer himself. Both of the parents have law degrees and were legal scholars. They did not have a comment. They paused and said, take our picture.
19%.
Our space here. Clearly
monthly trigger 421.93.
In a moment, but they're walking away. The two of
weekly trigger correction 9.23%.
Their son has just been sentenced to 25.
That's what he's calling for.
We do expect
Scott's calling for a pullback to right here.
The entire time throughout this
and possibly right here.
And the sentencing now, we'll see in terms of where he is sent to prison. It could end up being on the West Coast. His parents are based right on the Stanford campus.
I'm telling you.
Guys, they're headed out here. We're waiting for any sort of press conference or updates outside of the courtroom.
Expect that shit right there to get bought.
We'll keep you updated.
You can probably give us some more color as well.
As a matter of fact, by the time we get there,
Sam Bankman-Fried's parents.
By the time we get there, the weekly trigger, whoop, when this happens,
whoop,
we'll be right about there.
His mother wrote a letter and really
You're right about there, 490.
From the judge saying that
3 weeks from now
was a precocious child, talked about some of his personality quirks, but that really at his core that he was a good kid and that he did not mean to.
The weekly trigger,
where that's coming from, she really was making a plea to the judge to have some leniency.
So a pullback to the weekly trigger will be about 490 in about 3 weeks.
Moral compass, the defense team got up there and said, as an example, that his brother had told the defense team he's not.
So if you have access to the triggers, velocity, you watch that weekly trigger as it comes up in the next 3 weeks. It'll be right at that 490 mark.
That played into it. They said, some of his behavior is not consistent with what you might expect for somebody in this situation. So that was a big.
About 3 weeks, maybe 4 weeks from now. You'll see the weekly trigger be right around 490.
Stand, which really was at the core of some of the sentencing here and the perjury.
Mark my words on that one.
Really was important for the judge and ended up seemingly adding years to the sentence.
Yeah. We'll come back to you, as I said, as needed. Kate Rooney, tough day for the parents, obviously, as you clearly could see on their faces.
Tough day for the parents?
Fuck
them too. Sorry.
32-year-old son.
I mean, you should love your kids, right? Support your kids when they go to, like, my daughter was arrested for a felony. I would support her and love her and all that kind of stuff.
The courthouse in Lower Manhattan. So, Shannon, I'll come back to you. This idea of what is going to.
I mean, nobody else is going to love him, right? Nobody else is going to love Sam but his parents. I think that the parents should love the kids through this, but at the same time, like.
We do have earnings season around the corner.
I would be like the dad. I have no comments. You can't say anything as the dad.
Even though the market's closed, those are going to be two potential catalysts for this.
No, I would.
Yeah, I think the narrative coming out of earnings reports.
I don't expect parents to. Not loving their kids when they do something wrong.
I think you can stretched performance of the market.
How do I say this properly?
Between the end of 2020,
you can acknowledge when your kids do something really bad, and at the same time support them through that.
The S&P has
especially if they've really fucked up bad.
Perspective, and so
your job is, if you take on the job of being a parent for your child and they do something really bad or wrong, it's important for you as a parent to be there for them as they're rehabilitated,
for those that are actually able to,
or the attempt to rehabilitate them. A lot of kids today, man, they get in trouble, they fall inside the system, and they get worse. They come out of the system worse because the parents aren't there to say, hey, man, you fucked up. We're going to try to make you a better person, right? Support you through this, get you through your whatever, you get like a conviction or something like that. These people get failed. People who do criminal things get failed by the system. They get failed by the courts. They get failed by the prison system. And then parents are told, abandon your kids. You shouldn't. That's not your job as a parent. You can let their boyfriend, girlfriend, friends abandon them. Their bosses, everybody else can abandon them. But as a parent, your job is to try to get that kid back into being a productive member of society. It really is your job. You can't be having kids out there and just be like, fuck my kid. That's how kids go out there in guns and shoot places up, because parents are like, I'm serious. When you see kids out there and they're doing fucked up shit, shooting up schools and shit like that, that's parents not fucking taking care of their fucking kids. Being responsible for their kids. You know, it's my kid. He can do whatever the fuck he wants. No, he can't.
After 130 observations of the market being up 27%.
I'm serious. Like, as a parent, you gotta. There's like, you have a job of that to the day you die for your children. Or I believe that. You don't have to, but I do for my kids. I make sure that, you know, if my child has a mental health issue, right, my child should not have access to guns. You understand me?
Challenge, whatever you want to call it.
Like, there's a personal responsibility as a parent, even as a husband or a wife, to society and to your wives and your husbands and all that shit out there. It's like your brother's keeper to an extent, right? There's some level of that. There's a lot of this in the U.S. right now, like, well, we knew Johnny was a bad guy, but we didn't do anything. We didn't say anything.
To continue in the second quarter,
you know, and you're just like, what the fuck? Why are we here right now?
Meaningful earnings beats in the first quarter reports from those cyclicals, from energy, from financials, from materials, from industrials. I think you're likely to get them. And by the way, perversely, ironically, whatever you want to call it, that could be the catalyst that actually
no, there's like a
correction. As people say, what?
So I don't particularly. So if you don't understand this, I don't particularly like his parents at all. I got no love for his parents at all. I got zero. You understand what I'm saying? So as a parent, right? His parents should have made sure this stuff wasn't going on from an early age. Parents are doing the same stuff in their real life. Like, they're like wrapped up in this shit.
I don't think he was in that good role.
But enough people are non-believers in the idea.
Yeah, exactly. We knew Johnny had severe problems. We didn't think he was a bad guy. Exactly.
Are going to have this, you know,
when you really did kind of know, didn't you?
And then outrun it.
Your terminology is always so good. Always, really mean it. Like drop back, right? It doesn't have to be a drop back. What if in the second quarter, I'll make this quick. What if tech?
All right, I'll be right back with you guys. Give me 5 more minutes. Be right back.
6%. I mean, those numbers are pulled out.
I was trying to stick around and hear what Dad would say or the mom would say. The dad walked away, which is like the right thing to do, right? Walk away. Don't fucking be answering those questions. There's nothing that he can say
I think
that's going to help the situation. Nothing.
You can't have like
zero that guy can say.
But it's not as though we need to do the consensus estimate for this.
Yeah, absolutely. It's a real thing. It's a real thing. Like,
there are a lot of stories that are working and a lot of areas of the market that are working, not because there's an unbelievable earnings growth story in 2024, but they're still healing from the trauma of 22, 23. I want to give you one example. There's no earnings growth here whatsoever. SL Green, year to date, the stock is up 21%. It's up 165% over the last 12 months. In the last month, it's up 20%. This is a stock, this is a company that basically owns 25 office buildings in Manhattan, give or take. That's the business. There's no earnings improvement coming. There's none existing right now. It just didn't get more bad. The sellers have exhausted.
You framed the question well.
One more. We have an ETF that tracks IPOs. Its ticker is IPO, so really easy to follow. It bottomed at 21 in March of 2020. Then it had a rally. Then it got killed again. It hit 24 last year. Now it's back at 41. Many of the companies in the index don't even have earnings.
Yeah, you know, the other thing about mental health that really bothers me too is that we're not treating mental health issues, are we?
Earnings to deliver.
We used to really suck at it when we tried too. We just had sanitariums. Be like, yeah, just throw them in the sanitarium.
Do you think it's enough that there's this mosaic of execution, cost-cutting, redefining their competitive advantage, all of these companies that have been able to your point, start to create a narrative why they're better positioned for this next 2 or 3 years if we get better than expected economic growth? Do you think that they continue to be rewarded? Because I think that could be the outlier or the anomaly to this particular earnings season. Maybe we don't get all the beats, but we're getting a revisiting or interest, if you will, in company execution.
Well, Wolf, by the way, Wolf Research today expects another quarter of very solid beats and guidance. I would keep a close eye, too, on margins. Because, like Adam Parker makes the argument, that is the thing that's going to continue this leg up in this bull market. Margins are going to continue to be better than expected. Prices, they're going to have pricing power. Prices aren't necessarily going to come down at all from where they're up. Inflation is. Input costs are going to be less. Prices remain where they are. Thus, margins don't contract.
Can I go for a chart, though, on that? Sorry, real quick. Cintas, CTAS. I talk about this a lot. as a stock market native gauge on all the things that we're talking about. This is the #1 uniform supplier. This is part of the industrial story. They just reported an earnings quarter. Pull up like a 6-month or a 3-month chart of this thing. I don't day trade, so the one-day chart's not helpful. Look at what this stock has just done after reporting earnings. It's up 16% year to date. They have told you, the CEO on that call told you, everything Scott just cited from Wolf. You don't have companies ordering to the degree that they are from a company like Cintas if you're not going to have another quarter of earnings beats and good things to say. The two things need to go hand in hand, and I think they will. And I follow stocks like this closely because I think their guidance is more important than what an economist might think or a chief market strategist. Sorry, Jimmy.
You framed the question really well, and I'm going to just succinctly say it's a question of, is this sentiment or fundamentals that are propelling the broadening of the rally? And I think that's a legitimate question. Here's why I say that. For 2 years, a lot of these companies, just this is a little contrary to what you said, Josh, have outperformed in terms of earnings. I can look at Wynn Resorts. I can look at Delta Airlines. I can look at General Motors. There's a long list of companies that have outperformed on earnings. Share prices have languished. Now, what has changed in the last 3, 4, 5 months? It may be just sentiment. It may be, and I'm not making fun of this, but the technicians saying, oh, well, this many, stocks are above their 20-day moving average or whatever. I'm not making fun of that, but that's sentiment, if you ask me. What I really want is the fundamentals, which have been strong for 2 years, to continue so that it's both sentiment and fundamentals that are propelling these stocks higher.
Well, I'll tell you what's changed over the last 6 months. Earnings expectations have come in, to Josh's point. So you went on October 1st. You were looking for estimates for Q1 earnings to be near 10%. You know where they are today? They're half that. They're 5.1. Now, the market and the movement and the price action in the market hasn't reflected what the action in the earnings expectations has done in any way. It's divorced itself from the idea that, sort of to Josh's point, you don't need to blow things out of the water. You just can't have them be horrible. And you need them to be good, but they don't need to be gangbusters, do they?
Well, no, because you have the fundamental improvement in the economic outlook. Look at GDI today, Scott. It's ahead of GDP. That hasn't happened in 4 quarters. That is looking forward from a predictive perspective to tell you that the economy is going to be stronger than people were anticipating. They're waiting for GDI to roll over, and it's not rolling over. So if you look at that and you say, okay, it's all about earnings power, it's all about the ability to grow the bottom line, but that will come with time. So we can bring those estimates down for these first couple of quarters, because in the back half of the year, we are going to potentially have this more fertile environment from a growth perspective.
I mean, you do have, the Fed Governor Waller last evening saying no rush, in quotes, to cut rates, really echoing where we are. The delivering alpha survey that we do, I think the Fed will cut rates this many times in 24 was the answer. 2/3 think 2. Remember, the market says 3. The Fed dots suggest 3. So, our, smart group of market experts think be a little bit less than what the market expects, but nonetheless, you'll get the fruit ultimately, and that's all that really matters.
Well, I've made the case on this show, the longer it takes for the rate cut, the better it is for sentiment, because we would prefer to have that first rate cut and the start of the rate cutting cycle be out there on a fishing pole in front of us, goading us forward. I think that's better than randomly like, oh no, why does the Fed feel like it has to cut? So there's an asymptotic idea that we could just go on forever knowing that first rate cut is ahead of us. They're tighter than they need to be, but they've made the point in speeches last night. There's no rush. Okay, so that's where we are. There's no rush because things are good. I mean, that's like the way that I would phrase it.
All right, so let's do this. Let's take a quick break. We will have much more on the sentencing of Sam Bankman-Fried, of course. Plus, we're going to get to our calls of the day as well. We're back in just 2 minutes.
Feds.com.
Want to head back down to the courthouse in Lower Manhattan. Our Kate Rooney now has a new statement, not only from the district attorney, I believe, or the prosecutors, Kate, but also from Sam Bankman-Fried's family, whom you tried to get on camera to respond, but at least they are through a statement.
That's right, Scott. We didn't get a non-camera statement, but we have a statement from the family. I do want to start with U.S. Attorney Damian Williams on the sentencing of Sam Bankman-Fried. He says here Samuel Bankman-Fried orchestrated one of the largest financial frauds in history, stealing over $8 billion of his customers' money. His deliberate and ongoing lies demonstrated a brazen disregard for customers' expectations and disrespect for the rule of law, all this so that he could secretly use his customers' money to expand his own power and influence. The scale of his crimes is measured not just by the amount of money that was stolen, but the extraordinary harm caused to victims here. It's a pretty long statement, but that's the crux of it. He says, again, it's an important message to others who might be tempted to engage in financial crimes, and that justice will be swift and the consequences will be severe. And then, Scott, as I mentioned, the statement from Bankman-Fried's family is brief. We are heartbroken and will continue to fight for our son. That's from a spokesperson for the family, Scott. But that is the latest here. And I'll send it back to you. We also, I think, are going to bring in Mackenzie.
I understand you have Mackenzie Sagalas with you as well.
We do. We'll zoom out here.
We can broaden the shot out so we can see Mackenzie, of course, who covers all of this for CNBC.com. And you can give us some color from inside the courtroom.
Yeah, so it's just up there. You had his parents in the front row, Sam Bankman-Fried, and both parents looking pretty stoic. It seemed as though they were braced for this outcome. 25 years, right in line with what a lot of former federal prosecutors were saying. The judge is a no-nonsense, veteran of the Southern District of New York. He said that Sam Bankman-Fried in his statement today showed no remorse. It was a continuation of blaming others for things that went wrong. Today, Sam pointed to the bankruptcy estate as being a bad actor and the reason that customers of the exchange were not made whole. He said that the money has always been there and continues to be there. And that goes to a larger narrative that came up during the sentencing where Judge Kaplan said, I can name at least 3 times. And he gave 3 examples of when Sam perjured himself on the stand during his trial in October. He said that today's statement was an extension of that. Again, still not accepting blame for his role in all this.
Mackenzie, can you give us an idea of maybe the emotional temperature in the courtroom as that sentence was read, both from Sam Bankman-Fried himself, but also his parents?
It's really his mom who showed the most emotion today. You saw her jaw quivering for the duration of the roughly 2-hour sentencing hearing. She would often, at times when the conversation was escalated, look out the window, look around the 26th floor. You can oversee the Manhattan skyline almost as an escape from the deliberations. Her husband seated right next to her, just completely folded over. Just parents who are really devastated by seeing what's happened to their son here. They've stood by him. They have been, at least when I covered this trial, they were in that courtroom every single day, standing by their son. Sam, no reaction. He really has just been stoic throughout the proceedings when he was found guilty of all charges. After 3 hours of deliberation, same reaction as today when he found out that he faces 25 years in prison.
And Mackenzie, I wonder too, we've been covering this from the get-go. Put in context kind of the scale and what this means for the cryptocurrency industry. It's hard to understate how significant Bankman-Fried was, whether it was Washington or just his influence on the overall industry. Put that in perspective from covering this for about a year now. What's your take on the long-term impact of this criminal fraud trial?
I mean, it's such a great question. You and I both have been covering this. We've been covering the implosion of Binance's status in the United States. Changpeng Zhao faces sentencing next month. I think it goes to this larger narrative that, the bad actors are being washed out. Meanwhile, major titans of Wall Street, asset managers like BlackRock are entering the space, bringing some of that TradFi legitimacy to, what was once seen as more of a rogue sector. And I actually think it's been a good thing seeing this wash out. And just earlier this week, Do Kwon, another CEO being tried in this courtroom just behind us, also, being put, before a panel.
It's fascinating to see some of the washout in the fraud and crime really in this space. It was fascinating too to hear the defense say, this is not, or the prosecution rather say, this is a simple case of fraud and crime, not necessarily anything to do with cryptocurrency. Really interesting today, the color from inside the courtroom too. I wonder, based on the lead up to this seems to be in line with what folks were expecting. Is that fair to say?
Yeah, absolutely. So the government wanted 40 to 50 years. The defense was trying to make the case that he should see a max sentence of 6.5 years because the bankruptcy estate said that they were looking to make all customers whole. They were feeling pretty confident in that. And the judge said, hey, it doesn't matter if in the last 17 months the estate of FTX has been able to piece back together billions of dollars. At the end of the day, as you said, Kate, great point. It's just basic fraud. $8 billion of customer money was stolen and misappropriated.
I thought that dynamic was fascinating. The blame on Sullivan and Cromwell and the bankruptcy team. You heard really them, at least John Ray, who's the new CEO of FTX, say it was a metaphorical dumpster fire, what he took over. So some colorful language there. But Scott, I think we're going to send it back over to you.
All right, appreciate that very much. Mackenzie, thank you. Kate Rooney, to you as well. We'll come back, of course, as we need to do that. We'll be right back. We're back on the halftime report. I apologize. I was reading more stuff on the case. Bob Pisani has today's ETF Edge. Bob?
After years of taking a back seat to index investing, active investing in ETFs is having a moment. What's going on? Let's talk with Steve Sachs. He's the COO of Goldman Sachs ETF Accelerator. Steve, ETFs still mostly index-based, but active's getting a bigger slice of the pie. What is happening here?
Yeah, it is, and it's great to see you, Bob. It really is, and it's interesting that this whole active theme started years ago. The first active ETF was actually launched in about 2008. But what's happened sort of very quietly in the last 3 years, ETF assets have continued to grow, but the share of active has continued to grow. So 3 years ago, active ETF assets represented less than 1% of the total. Now it's almost 7%. And 2/3 of all ETFs being launched over the last 3 years are active. So it's tailwind, significant trend in the industry without doubt.
I am surprised how many old-fashioned stock pickers are turning to the ETF wrapper. I know you helped Jeremy Grantham recently, for example, start his first ETF in November, famous value stock, Brandis, one of the big stock picking value firms. You helped them launch 3 ETFs. It seems like the lower fees that the passive ETFs are charging has finally forced the hand of the old school mutual fund managers. That's what's happening, isn't it?
To a certain degree, absolutely. And then just this week, we listed an ETF for Eagle Capital Management, another 40-year-old value asset manager. But I think when you think about all 3 of those firms that we've helped, it wasn't just the fees, but it's actually 2 things, particularly here in the U.S. Global trend without a doubt, but here in the U.S., tax efficiency, obviously, of the existing mutual fund wrapper versus the ETF. Hard to beat the tax efficiency, particularly the transparency and the desire for the wrapper. And that second part, the desire, that's demographics. When you think about the generational wealth transfer that's taking place, the $70 trillion that's shifting hands, that next generation of wealth wants to consume those old school or fundamental managers in an ETF wrapper.
You'd think all the firms that want to start an ETF would have already started one after all these years, but there's still hundreds out there still in the wings. I know Goldman formed an ETF accelerator unit to help these companies create ETFs. Explain briefly, how does this work?
Yeah, no, absolutely. And it was really ETF Accelerator, Goldman Sachs, was formed out of one thing and one thing only, client demand. We had over the years a number of clients calling us, wanting to get into the ETF space, wanting to understand the roadmap. What were we doing? For lack of a better way to put it, we were really sort of giving them a pedicure and not the entire makeover. So what did we do? We actually launched a platform that allows our clients to come in, launch, list, and manage their own ETFs, but do it with the ETF experience, infrastructure, and risk management frameworks that Goldman can provide. Why? We've been in the ETF space for 30 years, as you know, right? Supporting the very first ETFs launched.
All right, we're going to talk more about that later. Much more on how active investing is changing the ETF space. It's coming up 1:10 p.m. on ETF Edge. Steve is going to be joined by Todd Sohn from Strategas. We'll also look at where the money has been flowing in the ETF world for this amazing quarter ending today. ETFedge.cnbc.com. Scott, back to you.
All right, Bob, appreciate that. Thank you. Up next, calls of the day. Got some good calls today. Bank of America. We're going to talk some banks, AbbVie, Oracle, and more when we come back.
or download the app.
All right, welcome back. Let's do some calls of the day. We'll start with Bank of America today. Downgraded at HSBC. That's to hold from buy. Mike Mayo has raised his price target, by the way, at Wells Securities on Bank of America by $4 to 44. So it is up 44% as well from the October 27th low. Nobody owns this. You got JPM, though, which has been a stalwart.
Yeah, I mean, it's the best. It's the best of the group on many levels, almost on any time frame that's like reasonably long enough. The stock has outperformed. Nothing against Bank of America. Technically, it actually looks great. And I think a lot of people can make money in a lot of these stocks. The banks have actually been the big laggards amongst the financials. The insurance companies have acted better. We've seen like a lot of outperformance relative to the banks, but now the banks are bringing up the rear, and that's okay. Maybe it's that time in the cycle for them. So I don't think you need a rate cut here. I think similar to the rest of the market, the promise of a rate cut is good enough for right now. And these companies, they've gotten rid of some competitors. A lot of the flows of money have gone their way because they're considered to be safer and more stable. So they've won already on a lot of fronts fundamentally. Now the stock's starting to work.
All right, how about Oracle added to the fresh money list at Deutsche? Jimmy, buy 150 is the price target.
Yeah, this is a place to put new money right now. If you're wondering where in the markets you can put new money, this is a place. Now, I'm not saying it can't go down next week by 3%. If it happens, just leave me alone. For the long run, this is a stock that's trading at about 20 times forward earnings with the sentiment. So both the fundamentals and the sentiment is behind it after their Q3 report. Building data centers like crazy to support AI and cloud computing. You know, this is a stock that underperformed technology for the last 15 years and now is rapidly catching up. At the very least, stay out of its way. But if you have money to put to work in technology, this is the place.
If it goes down 3% next week, can I give you the business?
This is how it works? I give you permission? Is that how this works?
Well, you just said if it does, leave me alone. I'm like, I mean, I'm not agreeing to anything.
I know you're not. I was just checking. What is it, opposite day or something?
All right, I don't know. AbbVie, what about that? JP Morgan reiterates that as overweight. You own that.
Yeah, it's a beautiful healthcare stock. They've made some key acquisitions. First off, very attractively priced, 16 times earnings. It's got a nice dividend yield. They've made some attractive acquisitions right now. A lot of money coming into healthcare space. Again, this is one that you really shouldn't worry about. And if you have new money, you can put it to work here.
All right, what about healthcare? Yeah, I mean, Pfizer, which, you singled out a couple weeks ago.
Yeah, look, healthcare is really multidimensional. It's really tough to make a broad call on healthcare, period. It's not like the energy stocks where they're unidirectional and mostly behave in line with what the commodity does. In this particular case, you've got all different reasons why different sectors might be under or outperforming. I do think broadly the fear over GLP-1 or the excitement over GLP-1, depending on which stock, I think that's probably been overdone. It's going to get very competitive, even if you think it's a huge business. It's not a slam dunk to just buy any company that has a drug in development for that space. By the same token, a lot of stocks have been ignored by investors because they're not working on GLP-1 drugs or they haven't gotten far enough. And I think that's the case with Pfizer. The stock has been left behind by the group, been left behind by the market, one of the worst performing names over the last 3 years. I don't think the fundamentals are as bad as where the current valuation is. I'm a buyer here. It doesn't look like most of the stocks I normally talk about. I usually prefer the 52-week high list. This is on the 3-year low list, but I'm in here, and I think things could turn in the second half of the year.
Speaking of healthcare, UNH, Jimmy, that's let you down. It's down 6.5% year to date. It's only up 4% over a year. We all know what the market's done relative to that.
We do, and there's two things facing United Healthcare. One is this data breach from a few weeks ago. It's going to cost them some money. Now, they've already announced I think it's about $3 billion. They've already announced it. The market does want to get past that. It wants to get past the second issue, which is medical loss ratios, which are higher than expectations. In the upcoming earnings report, and they're an early reporter, let's look at those medical loss ratios. That's the real story. The data breach is awful, but it's behind us.
All right, coming up, we'll have more stocks on the move, and Mike Santoli, he joins us next with his midday word.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
All right, we're back. Senior markets commentator Mike Santoli here with his midday word. All right, curtains coming down on the quarter. We turn the page. What are your thoughts?
I mean, it's hard to quibble with what the market's been doing and why it's been doing it. So I think, you guys were going through all of the list of the asset side of the ledger here, and it's getting realized in the market. The behavior of the market itself is probably its best selling point because its ability to get and stay overbought, the way that these kind of persistent rallies go, what it means when breadth has been expanding like this. It always means, okay, no major peak. If we could say no major peak, put it off to the side, then what? And I think then what is, manage your expectations a little bit. I think it's useful to think of where we were 6 months ago. 6 months ago, we don't have enough buyers for all the Treasury bonds. Yields are going to go up. The economy's not going to handle it. The Fed's going to need to engineer a recession. Earnings are never coming back. It's over. Okay, 6 months later, we can't find a negative thing to say about this economy. So it's just a matter of be aware of the ebb and flow. You do have sentiment starting to get a little bit happy. It's not a fatal flaw at all. It's just a bull market. And when it's a bull market, the overshoots happen to the upside. Maybe we're in one, maybe we're not.
Let's get a look at earnings reports, right? Let's see what the commentary is. Let's see what the guidance is. It's real, right? Yeah. We're going to mark down scores. We're going to decide whether there's legitimacy in the belief that the market can keep going.
Even if we don't compound at 50% annual rate the way we have been.
Exactly. And we get PCE tomorrow, too. We can't forget about that. We're not going to be here, but we will be on Monday. And the market is going to be an interesting trading day.
I'll be right in my pod.
All right, good stuff. I'll see you on Closing Bell today. That's Mike Santoli. Up next, we'll look at some of the committee's top stock leaders and laggards this quarter. We're back after this.
Fiverr.
All right, we normally do winners and losers around this time of the show every day. We're focusing now on the quarter and the committee. All right, some of your big winners. Shaq up 43%.
What's up? How you like me
Toast
now?
35. Crowd, I haven't gotten to the losers yet. Hold on. Crowd up 28. Uber 26.
And we're out of time.
Yeah, we'll be right back. eBay 20. Berkshire 17.
Yeah.
Matterport's been a loser. Pfizer, I mean, you obviously bought it recently, so I don't really want to talk about that because you already did. Of the ones that are up a lot, which couple are you most optimistic about as we move forward here?
Believe it or not, I think Toast has the most potential. And people laughed at me on this one, and they may still if it ends up not working out. But this is a small, sort of mid-cap-ish name. Doesn't have a ton of coverage. The analysts following it aren't that excited about it. Most of the price targets are close to where the stock trades now. And I understand all the reasons why. It's a competitive space, and having restaurants as clients is not exactly the most exciting thing in a world of AI. I totally get it. I still think there's something special here, so I'm excited about that. I would also just very, very, very quickly point out, this is the whole point of portfolio management and diversification. Yes, I have stocks that suck. Believe me, I know. You don't have to tell me and remind me every time. But when you have huge winners like CrowdStrike and Uber, stocks that go up 200, 300, 400%, the losers don't matter. They shrink in importance to the overall portfolio. You almost can't see them. And eventually when you get rid of them, it's like they never existed. That's the benefit of having a diversified portfolio, knowing some of your holdings are not going to work, and it's fine.
Jimmy, so MP Materials has been a big dud. Paramount's been a disaster, we know. PG&E.
Which would you like to apologize for, sir?
I'm getting to the good ones now. Disney's up 50%. Applied Materials 27. Would you rather me go through the whole list of good ones and then say, oh yeah, well, MP down?
You just did that with me, but
whatever. GM's up 26. Delta's up 18. Qualcomm 17. Berkshire, Exxon, Win.
Yeah.
You've had a lot of gainers. I'll ask you the same question. A couple that you're most excited about. Don't mention Cleveland Cliffs because you do all the time.
Yeah, I know. Interesting. Delta. I mean, look, I know I used to annoy you with this, Scott, but the TSA passenger statistics are still sky high. People are traveling like crazy. Ed Bastian, every chance he gets, tells you that demand is great. This is one of those companies I mentioned earlier that's been outperforming for 2 years. I think it's going to continue. Same thing with General Motors, by the way. Regarding the losers, because I got to do this, and like Josh, maybe you'll take over as my therapist, because picture that meme of the guy standing in the empty pool, looking down, like Paramount, like, why, Jimmy, did you not sell it when they cut the dividend? Like, what seriously is wrong with you? There's a character flaw here. I acknowledge it, and it's going higher, so whatever. All right.
All right, we'll do final trades next.
All right, I'm back. All right, so I got more problems. Hold on here. That one right there. I'm like sitting here well, I wasn't sitting here in the actual chair. I was just got a phone call. So, but I am waiting for this to happen here. You know, any of this kind of stuff. So, but they're parking this. You see the parking the bus right now? There's a couple things I want to say to you. I was just got a phone call. Just had a phone call here a moment ago. And I do want you guys to know that you likely have some. I do want to let you go know something. There's likely some kind of an auto trading going on today. There's probably a lot of Wall Street is in their helicopter going to the Hamptons. They probably started leaving yesterday, probably Monday. Jamie Dimon, Jaime, has probably been there for a week or two. And they're going to an extent, put this market on, what would you call it? Like autopilot. Be the easiest way to say it, maybe. Autopilots until they get back. So the quarter is ended. Or this, I shouldn't say that. Today is the last day of the quarter. Yeah, so what normally happens is if the market is in turmoil, they'll say stupid shit like, did you know that all the traders are forced to bring their laptops with them on this vacation? I shit you not, right? And then in the bull market like this, you're likely not going to see a crash between now and they get back from their vacation next week. Do you understand what I'm saying there? So if you're expecting like big doom today into Monday, it's not going to happen. It's likely not going to happen. What they do though is what they will do though is they will come back, like retail's partying over the weekend. They will come back on a Monday or Tuesday and be like, you know what, we're going to sell this shit down on them. So be aware of that too into Monday. Now, what I'm going to do here is this. I did just get off a phone call that I have some stuff I have to address before the end of the week. And I'm going on vacation myself today at the end of the day. We get out of here and we don't come back until Sunday. So I'm going to do some house cleaning with you really quickly. The first house cleaning bit would be you're going to get some charts today for the weekend for any of you degenerates out there that can't take a vacation. Because I know some of you don't take a break. Maybe you have a job or something and you just don't look at the screens all day long, 5 days a week. People like me that do look at the screens 5 days a week need a break so that I can serve you better, right? But I do realize that some of you don't look at the screens all day long. Some of you want to trade through the weekend. So I will have up some charts for you in the Discord for, I'm going to try to post, you know, maybe I don't know if I'm going to try to do something for subscribers over the weekend. Maybe a bonus for subscribers over the weekend so they can get some access to maybe more of the Discord from now into Sunday. So you can see more of the Discord. So if you want to trade through the weekend, you can have the ability to do that. As the quarter is ended, maybe we can do a little bonus or something. Bork's probably out there right now going, fuck, I hate when he says that shit because we have to do it. But maybe we can do something like that. I don't know if we functionally can or can't, but maybe we'll try to do that. Give you guys access, more access over the weekend. Now, pro traders, I guarantee you'll get that stuff. Supporter, I don't know for sure, but I will ask. Try to get you guys some bonus content through the weekend. With that being said, you're also going to get from me over the weekend. By Sunday, you're going to get an outlook for the start of Q1. I do want you to know that normally we're waiting for the JPM caller to come out to look and see what they're saying, right? What are they saying? What's the trade going to be? And then The first 2 weeks of the quarter, whenever we come into a new quarter, I always sit on my hands. Oftentimes we'll blast up like the first 2 weeks as or beginning of quarter flows come in, or we blast down for a bull bear market. But you'll see like that initial week, and then we like drop week or two. We like drop down, and that's the real dip buy for the quarter. So I try to sit on my hands normally the first couple weeks. I try to, not always. Doesn't always work. Some quarters it's like we're just off and running. I wouldn't be surprised to see us be bullish for another week or two. And then like that third, fourth week, we see that down move. I'm still looking for that 5,300, 5,350 to sell. Now, if they begin to sell it now, we get underneath the hourly trigger. We start trading the daily trigger, that kind of stuff. Yeah, I'll switch into that bear mode for a correction early. But as of right now, it's the end of the quarter. Last day of the quarter, they're parking the bus. They got flies, butterflies, condors. They have ohm in the market. You've got, about the money that's exiting the market, money that's coming into the market, and that will continue into the next week or two. So if you are a long-time market participant, you just sit on your hands for the next few weeks. Make your decisions. I'm going to take some money out of the market. I'm looking to enter the market. I didn't get a chance to get in Q1. I want my opportunity in Q2. That kind of stuff. There are people doing that actively right now in the next 2 weeks, today into the next couple weeks. It's a good time for people and for you to take a moment to just sit back and see what the market is saying we're going to do for Q2. What are expectations? You also want to hear people come out in public and say, we're just listening to Scott a few minutes ago on CNBC, right? He's like, we're getting an inevitable correction, right? There's going to be an inevitable correction. These are all, you should say those things. It's good to say those things. Like, how far down do we go? I don't know. I know what I think we're going down. If we do go down, I think we're going to hold 5,000, 4,900, 4,950. The worst it could be. Currently, that's the worst that I think it's going to be. So just ease up. They're not going to crash it while they're on vacation. They're all hanging out in the Hamptons right now. They're not going to send us down 400 fucking points in the close today. No, your puts are not printing from yesterday. They're not going to pay you today. I know that today is our Friday. I'm sorry, they're not going to fucking do it for you. I know every Friday's been good for bears. This ain't that Friday. They're likely going to pin this shit at worst. They're likely going to pin this shit, park the bus. If they do send it down, they won't probably do it to the end of the day. If they were even going to do it, and it's still a low percentage probability at this point. I wouldn't expect too much craziness to the downside into the last day of the quarter. And if anything, if history's proven anything, we're normally bullish for at least the next few days after, even into next week. Like a whole week of bullishness next week would not blow my face off. I wouldn't be like, yeah, I wasn't expecting that. That's probably your highest probability, is that we're going to be bullish into the next week to 2 weeks, next week as well. Now, depending on what happens at the end of today, if we blast up, we hit 5,300, 5,350 today, yeah, then I'd be like, yeah, let's sell Monday for sure. So price will matter in this as well, is my only other point here. What else? Burn all those 5,300 Cs, and then they do it next week. So anyways, do you guys have anything for me? Because what I think I'm going to do here at this point, and you're going to get a big write-up from me for Q1. I'm going to go out there and read everything from JPM and Marco and all his bearishness, and Mike Wilson saying the market's going to crash. Yeah, I like that trade too. I like that NVDA trade for next week. I like that trade too. Maybe an Apple trade would be nice too, right? Trap burned all the calls in Apple, and they send it right back up there, and they get the print that they want. I've been in and out of 525Cs now. I've been in and out of 525C 5 or 6 times in the past 2 or 3 days. In, out, in, out, in, out, in, out, in, out, in, out. I closed yesterday At the bell, I was done. By yesterday, I was done. I have a few things kicking around. I've got updates on my positioning. RGF, I said I would hold it for Q1. I'm not selling that shit at a loss. So I'm just going to stay in that shit until the fucking bitter end. I've got a put hedge on currently still right now for the market that expires today. I have to close that by 3:59, 4:14, somewhere in there at that point. And right now, I don't know what the fuck to do in that fucking trade. Hopefully, I can get a quick blast down the last 5 minutes of the day. Hopefully, it's not a quick blast up because that'll zero me out of that trade. And dude, that trade for me was like a no-brainer. Like 525 to 5,000, I'm a winner. So if we go above 525, it goes to zero. I got some other little rinky-dink shit sitting around. I've got some crypto sitting around. I've got no outstanding stuff that's for Q2. That's like, hey, I got a fucking trade on for end of year, any of that kind of stuff. In terms of size in the market, I divested myself in Q4, Q3 and Q4 of 2022. No, 2023. And on any rip on any of that stuff, I took all that money and I did not buy back in for January into the market. So I'm still sitting on a ton of fucking cash. As a matter of fact, I was looking for investments. I still haven't found anything better than 5% for this whole quarter, for not being able to jump on the train with size owning the market. So even myself for Q2, I'm looking for some kind of a dip to buy for the rest of the year. There should be like one chance in spring, late winter, springtime. There should be another chance to buy the market around August. And to be honest, I'm selling homes right now. I'm trying to be out of the housing market by at latest next spring, but I hope that I'm out by by summertime. And I'm hoping to not be in the market by December, March of next year, and to actively be looking to sell this market myself. Now, those plans can change depending upon what happens, of course. But I do want to participate owning the market this year. So, and I don't know when that is. I don't know if I'm going to get left behind again for Q2. And I have to wait for that election volatility to participate. But I've become very conservative the last Q3, Q4 of 2023 have become very conservative with my investments. My investments have matured over the years, and so yeah, I don't know what to say on that stuff. I'm very upset too because my 2023 expectations failed because I didn't stay in the market, and I've missed this run, which I would have been like tripled my money. So I have a lot of disappointment in some ways for my own personal investments and stuff like that. But I've got other shit that's really good. I've got like shit. I got like houses that I've. As a matter of fact, I just found out. I still own another house that I didn't know that I owned. That's a long, complicated story. It was a pre-COVID thing. I was tied to an agreement to do certain things by certain dates. I didn't do them. I couldn't do them. COVID prevented me from it. And I won an auction, and the house went back, or they said, hey, we want to take this house back because you didn't do this work that's required. So I bought, now like I normally buy houses on county auctions, but this house I bought specifically through a county program. It was the biggest mistake I ever made. Would never buy a program house ever again, ever. And watch this down below real quick. See how we're coming into the 5250 down here. You want to see what happens like right now. Anyways, I told them to take the house back because COVID, no one could work. Couldn't get anybody out there to work. Couldn't get there myself, all that other shit. They said they were going to take the house back, right? They never fucking did. They fucking just, they were doing something illegal, which is carrying, wholesalers do this. Wholesalers, what they'll do is they'll carry the paper but not own the house. And it's highly illegal. And they did that to me. Of course, they're a government entity, so they can do it. Until I started to get, oh, yeah, this is real. So you guys don't know everything about my life. It's like this house right here, right? Started getting blight tickets and shit. Like the lawn wasn't mowed anymore. The fucking house, so then the county is like ticketing this house. And I found out that they never fucking put the goddamn deed back in their name. So of course all of this debt is accumulating on this house, and it's not in my name. It's in an LLC that I have, and so I have a fight now that I can get this house back. I have a actual argument to say, hey, look, this house is mine. You never fucking took it back, and I'm getting dinged over here. So I want this house too. Oh, dude, they got me on the taxes. They got me on the fucking taxes right now. I had to go to the fucking tax commissioner and be like, what the fuck is going on here? Like, it's not just I'm accumulating the taxes, right? I'm accumulating this, how I found out was a blight ticket. That's how I've actually found out. But then once I found out, I started digging. I'm like, oh shit, I'm in arrears on taxes in this house now. I'm in arrears like 3 years in this taxes, but I'm willing to pay the taxes to keep ownership of the house. So we're in this weird place right now. But anyways, you don't need to hear about all that shit. So, it's so fucking stupid. So fucking stupid. They will try to tax sale me. They will. They will try to tax sale me. It's so fucking stupid. Yeah. Blight is dude, I had a blight ticket once. You want to hear some crazy shit? I got all kinds of fucked up stories with counties. One time I bought a house, and you want to hear a fucked up story? So I bought a house. I show up, and there was like a garage door, big giant garage door, and the garage door wouldn't open. And I didn't think much of it. The structure looked fine. Couldn't get into the garage. And when I finally closed on the house, I showed up, I opened the garage, and guess what's inside? Stolen truck, like a Nissan truck. It was like brand fucking new too. And so this house was up on blocks. They'd stripped it down and stripped it of everything and like jammed the door so you couldn't get it open. So I see the truck. I get the fucking door off. Finally cut the door off this building or this garage, freestanding garage, right? Rip the door off. I find the fucking truck. I call the fucking city. They won't touch it. I shit you not. Won't touch it. Call to have it towed. Tow trucks wouldn't touch it. Nobody would touch this fucking thing. And then I had someone say to me, just drag it out in the street. Right? Literally, drag it out in the street. Didn't do that. But I started keeping records of everybody I was contacting. One of the people, I think a tow truck driver, the police said, call the city or the county to have to have them blight ticket it, and then they'll tow it. Okay, so I went down that process. The fucking county came out and blight ticketed me. So I had to go to court for that. I got the inspector in the court with the judge. This is a true story. The judge or the blight inspector is like, we got a report that turned them in for this fucking stolen vehicle, right? And it can be seen now from neighbors. So I got nailed with like, I don't know, $3,000 or something. I think it was like 2 tickets or something like that. One for like 15 and one other one for $1,500, right? So we're in the court, and I'm like, who do you think sent this? I had to prove in the court. They stopped the proceedings. because you're not allowed to like open your phone or anything. I'm like, let me show you my phone number and my fucking email. So it happens all the time. It happens more than you know. If you're just a normal person, like normal job, you never see that stuff. But if you're like own this stuff or whatever, it happens all the fucking time. Happens all the time. Happens all the time. One time I got sued because a lady fell. She was trying to run a scam on me, and she pretended that she fell on a sidewalk. She thought I owned it. It wasn't a sidewalk. It was like a sidewalk, and it was like part of a sidewalk and part of a parking lot. And she sued me. And lo and behold, guess who owned it? The city. So I was good there. But you'd be shocked. Your mind would be blown if you've seen the stupid shit that you deal with like just constant, never ending, just constant. So, anyways, it was hilarious in this court. The judge and the inspector, of course, like pulls down the clown mask, and the judge is like, "Oh, fucking A." Now, guess how I got rid of that truck? That stolen truck. They never came and got it. Police never came and got it. I racked up all of this stuff. And then I finally found a tow truck driver because I didn't have the registration because stolen vehicle. I finally had found like this like tow truck driver, one tow truck driver. Like after the 10th time I try to get rid of this fucking stolen vehicle, I'm like, look, dude, all the paperwork of everything I've done. I've called the police. I've had the police here. I've had the county here. Been in court now with this fucking thing. They finally came and just dragged it out of my yard and brought it to some fucking car lot somewhere, or I don't know, some junkyard or whatever. But it was a disaster. It took me months. I should have just dragged it out in the street. Should have just like hooked up the back of my truck, dragged it out in the street, parked it like cockeyed, blocking the road, and they would have came and got it. Bureaucracy, baby. Bureaucracy. All right. So I will be, my point here too is this is what I'm going to do. I'm going to leave the stream up. It's 1:20 in the afternoon. I will stop into the Discord over the weekend, say hello and stuff like that. I need to spend some time with my family. I need to get off the screens. My kids miss me terribly, and I mean terribly. This whole month has been burn. I have neglected my family. And I'm going to get ready to go and do some vacation here. Oh shit. Look at that. Look at that mister down there. As a matter of fact, this one right here should match up to wherever this hourly trigger is up here. There should be a squeeze coming up here. Anyways, I will be here with you today. Rest of the day I'll stop back in, but I'm going to start packing in shit. I've got Robinhood up, don't I? You mean RH, or do you mean the ticker symbol RH or Robinhood? It's right here. This is Robinhood, and I changed it this morning. Trade is dead, under $20. What is it trading right now? It's trading $19.95. Yo, you want the actual ticker symbol RH? Yeah, okay. Sometimes you guys use the RH and Hood, Robinhood, and You guys use it like. You get what I'm saying, right? So I got Mr. Up, AMC, blooding it. So we'll switch out AMC. We'll do RH. Ooh. RH, baby. And you are at your price target right now. You're going to sell 362, 368 up here. Getting ready to sell it. It will turn around now. You will get a turnaround. And you're likely going to do a back check all the way down to 300. You're likely going to see this whole move get erased. And you're going to see a retest of this and some consolidation likely. This daily trigger will need to come up. See this daily trigger down here? You're going to need to see this come up. And this will trigger, and this is going to take a couple weeks, but this will trigger, this back test here on RH will trigger a multi-week, multi-month upside move. So just be aware of that. You will see this roll back down. This will be the correction probably that we have in the marketplace. And if this holds and we don't crash, this will trigger a multi-week, multi-month move on RH. Good question. There's RH for you. I'd be starting to like between now and next week, next couple weeks, start taking some money off. Trade is complete almost at this point. Yeah, Sam, it's getting there. It's getting there. Trade's almost complete, brother. And I'll leave it up right now. You can see, I would say start scaling back, taking your winnings, and then look for a back test, corrective move or phase in the marketplace. Any other questions? Ask in the chat. If I had anything to tell you guys out there, it would be get off the fucking computer and go touch grass. Seriously. Go for a hike, go for a bike, go for a swim. Get off the screens for a few days. Volunteer to clean up a park. Clean out your attic. Clean the basement. Help your mom. Do something, anything but the stock market, because we have to come right back to this for another 3 months. Take the time. I was just on the phone with a friend, and I just said, I didn't just say, we were talking together, and I said, a lot of people are like, well, why do they still celebrate Good Friday? It's not Good Friday. It's just it's a point in the market where they can use any holiday for an excuse to take a break. Career low. Career low is just like, I eat nails for breakfast. I eat nails for breakfast. This is all bulls have to own right here. Bulls only have to defend that right there. That's all they have to own. Quick look at Lulu. I'll sleep when I'm rich. They used to say that in the army, like the worst times in the army, they'd say pain lets you know that you're still alive. I eat pieces of shit like you for breakfast. In the army, the worst possible moments you'd say to people, pain lets you know you're still alive, man. Still here. You haven't died yet. Lulu. GME looking kind of rough, so we'll switch over to Lulu. What do you want to know about Lulu? You're still bullish. If we go below 377 on Lulu, you are officially, anytime we're underneath the weekly trigger, you're officially in a bear market. Okay? What you want to see in Lulu is consolidation and a move higher, right? Weekly trigger goes under, daily trigger goes under, picks price back up and sends it up higher. Whoops, sorry about that. So right now there's I would not be a trader. I mean, I see what you're talking about. You're above the hourly trigger for the squeeze higher. I think that's a valid trade as long as you're above. I think that's a valid trade for right now. The only thing that I would warn you of on this trade, let's look at it right now real quick. Let's get out here. The only thing I would warn you about right here is a failure at any point. This looks like a good setup on the surface, but what could easily happen is you get dropped right down right here. Very dangerous. The moment this daily crosses, you want to see the squeeze up to confirm the next leg down. But at the same time saying that, because of that cross happening, sorry, this is getting all fucked up here. For me, there's no trade here. I get what you're saying. Like, do this, right? Then do that, and then you go down. This is the trade right here. But I'm telling you, this cross right here could easily set itself up to just Trapville. I would say you'd have to monitor it closely. If you wanted to take this trade now, you can. We're back testing the hourly trigger, but hard stops. Hard. Definitely not options. You want to own the underlying? Sure. But I'm telling you what, there's this Lululemon is dangerous. So I might own the stock here and then put some hard stops under 389. Dangerous. No interest in trading this until it gets back above its daily trigger. Price hourly, daily trigger. And I would prefer that to be above the weekly and the monthly. A lot of volatility here, a lot of danger here with that trade. Better trades out there. IWM, already have it up. You guys already have my IWM stuff. I've already given you my outlook on the IWM. I even posted it on Twitter. And I've got it up right here. Still grinding higher right now. You got my take on IWM. What else you guys got there? PayPal, I'll bring that one up next. Reddit looks like it's cooling off right now, so we're going to switch out of Reddit and look at PayPal, PYPL. It's good, doing great. I like it. Still like it here. Still like the stonk here. You get the nice little cross down below. Still bulled up. Still above its hourly trigger. Look for that check back down below at $62 at some point. You just sold off of $68. Next upside price target above 70, $72, something like that. All right, no, it's the wrong one. Hood. Kevin Hill, where are you? Can I do Tesla? I already did Tesla, but it's up here right now. So here's Tesla, right? I did it earlier today. I'll do it again for you. Here's Tesla. A couple things you need to know. We update Tesla 3 days a week on the website. 3 days a week, you get a Tesla update from us. I get asked a lot to do Tesla updates. Currently, right now, Tesla rejecting off its daily trigger, 180.98. There is no upside trade on Tesla unless you break above 180.98 and beat the previous high at 184 and change. That's right here. And the hourly trigger carries. So you'd want to see this hourly trigger come up like this, right? You'd want to see price shoot up here. Whoop. Gets that new high right there. Have this daily trigger come underneath. And this is where you instigate a trade on Tesla. If you want to snap a picture of that right now, do a snip of this, you can. But you're looking first for that to happen before you even consider entering a trade on Tesla to the upside. Right now, this is bearish. Okay? And even then, you're looking for that trade to 208 is your target to the upside. Target 208 to the upside, but only after that happens. This looks kind of weird, but it's more like over here. That just doesn't look good. Hold on a second here. Looks like shit. Sorry, I drew that in haste this morning. Give me a second here. Something like that. And I'd be a buyer like right there. And that's where you get your new high right there. Let me draw it in. something like that. And that would be a buyer right there, but not until that happens. Very dangerous being a buyer down here right now. Very dangerous. Could easily just roll right down and the actual dip buy was down there, or just roll straight down to the depths of hell. So no trade for me on Tesla right now. A couple notes on Tesla here. We update Tesla 3 times a week, and twice a day we give you, if you're just a supporter, $30 a month, $30 a month. No reason why you can't afford $30 a month. And we actually update Tesla twice a day with manipulatable trigger charts for you. So as a supporter level, you get those trigger charts every day updated. You can go in there and, use your cursor and all that kind of stuff to see where Tesla is. And bonus, you get access to our Discord. So there's Tesla. And this is not a projection either. This is what I would want. I got to write that in so you guys aren't trying to fucking... I know how you guys are. You guys are savages. You guys are like, Cap says we're going up here. Buy right now. Cap is not a buyer. Until there. Cool. It is turning, though. It's flattening out. I mean, it's bullish, but it's not good enough. It's bullish, it's just not there yet. It's still brewing. The problem here is that you get like something like this. Woof. And that was the actual dip buy. So I need to see this happen before I'm a buyer. Hey, David AMS, have a great weekend, brother. I don't want to say that to all of you out there that are mentors, moderators, admin. There's a few things here. Mentors, moderators, admins across everywhere. Developer, Bork, our developer, right? Anybody out there? Joe Donut. I love all of you. I appreciate everything you've done this quarter. And I want to say something else, too. I've noticed, past couple days, I noticed the community feeling each other out, right? You're all getting to know each other and stuff like that. Feeling each other out. I really appreciate. I've noticed that there's been some banter, but then there's also been some a little bit of like, this, that. I really see you guys still working with each other to be like, hey, man, I'm sorry I wasn't trying to be a dickhead, or I was just joking, or I didn't realize that would piss you off. I really appreciate the community, particularly. If you're out there listening right now and you've been in any of those dust-ups or whatever, I'm really grateful that you're all trying to get along. It's important. I want you guys to know something here, that you as the community is what makes this. You make this, not me, not Joe, not Bork. We are the facilitators for your community. You guys are the actual community. So I want you to know I'm watching. Even though you don't think I'm watching, I am watching in the background. And I appreciate, when you have a dust up, that you guys are able to be adults. Adults. We already know that Twitter is a place to shitpost and to troll. We already know that if you go to Wall Street Bets, you're going to get shit on. We already know if you go to Stock Twits, everyone's got an opinion, right? This is your community, a place for you to have a safe space and to grow relationships with people. So I really appreciate that I can see you guys doing that. You're like, hey, you know what, I let that slide, or hey, you know what, I apologize, or hey, you know what, I wasn't trying to be an asshole, I was coming off as an asshole, whatever that is, all that stuff. I really appreciate seeing you guys do that. And I want to tell you why you need that in your life. It's an important thing here. You have everybody against you. Everybody is against you. You have the banks against you, hedge funds against you, CTAs against you, CNBC against you, Bloomberg against you. You have other places with trolls and all this other shit. You got so much shit out there You don't need it here. And try to remember that. There's so many so many outlets for that already out on the real world, that your community is important. There's so much shit against you, people pushing their own against you, all that other stuff, that you need that place that you can be where you're like, hey man, I'm here to make money, right? I'm here to make money. Ultimately, I'm here to make money. And I need those people around me. Or I don't have any experience selling calls on SPY or selling puts on SPY. John L. is sitting there all day long, right? I don't have any experience trading futures. And David AMS is there showing you how to trade futures all day long. Your community is the place where people are going to try to help you to become a winning trader, winning investor. They're spending their time with you all day long, right? All day they're there in some capacity. Trader Podcast out there every day giving you a digest. These people care about you. So I'm grateful to you right now, seeing how you guys are doing that stuff. You're acting like a family, and I like that. It's good to see. You guys are like, as a community, you guys are making my week right here watching you guys do that. So I appreciate that. I can see it. When I'm on stream with you, I've got people talking to me on a screener here. Moderators, administrators, mentors, all that kind of stuff in the background. There's more. You guys see me on screen, but you don't know that there's other stuff going on. You can't see it. And I just want you to know that I see it, and I really want you to know that I appreciate it. It makes my day, it makes my week, makes me feel like I'm doing this for the right reasons, so we can become that community. So I want to say a big thank you to you guys out there as the community, as a member of the community. No, you don't have to apologize. None of you out there need to be apologizing. Nobody needs to be apologizing. I see you guys are adults, and you guys are like making our community. Who just said that? Gary H. I don't know what happened with you, but I want to say to you specifically too for just saying that. You guys know you're the bigger man always, right? You're always the bigger man, and you're all, like when you're in this context, right? We're in a community here, right? So you're the bigger man. And I'd fucking fight beside you forever, Gary. I got your back, brother. 100%, dude. I'd rather be your fucking friend all day long because you're like that. I would trust you, that you're going to make the right decisions and stuff like that. What you just said, right? Don't stop apologizing in the chats, guys. I love you guys. You guys are fucking awesome. Even when we have dust-ups, I say things sometimes that piss David AMS off. He's like, what the fuck's he saying? I'm like, dude, it's an American thing. It's not what you think it is. Or you're misinterpreting. Or I said the wrong thing. Or I made a mistake. Or I didn't mean to say this. Or I didn't mean it in that context that it comes off as. I got to apologize to Joe Donut all the time. All the time. Joe Donut and I all the time are, we don't fight, but we're like a family. We're like, we got to discuss this. And this is my thoughts. This is your thoughts. I got to talk to Aaron and do that. I got to talk to Bork and do that. The other day, literally, so Bork's been developing everything for us, right? And I'm like I'm in the fucking website, and I deleted a bunch of stuff unintentionally. I'm like, I fucked up. I had to go to Bork and say, I did GIFs. I'm in the box of shame. I fucked up. And thankfully, Bork is like, don't worry about it. I'm going to teach you how not to fuck up. No, I don't think you got mad at me, David. There was one day where David was like, I'm out of here. He's like, I'm done with this conversation. We're talking politics or some shit. Well, like, will the U.S. ever come to the aid of European countries? And I'm like, you're fucking right, we will. To the fucking ends of the goddamn earth. I'll go there myself to defend fucking Europe. All day long, I would defend Europe. I would defend every fucking country. If my country asked me to come back, if we go to war and they tell me, hey, show up at a MEP's place and fucking do a fucking physical checkup, I'm telling you right now, I would drop everything. And I would not try to get out of that service. I would serve my nation, and I would serve all of you in Europe and every fucking free country in this world. Every free nation in this world. I would. I'd put my fucking life. My wife would too. I don't know if you know that. My wife is a veteran as well. I really, truly believe in freedom. Even though we suck at it in the U.S., We really do suck at it. But at the same time, there are countries that do it better than us too, right? And I would totally defend those countries. I would do it for any nation out there. Any nation out there that's being invaded, being oppressed, any of that kind of stuff. So I just want you to all know that I love you out there, okay? That's really, truly the truth. No, I'm talking about, you know what I'm talking about, right? You guys know what I'm talking about. You guys know. Russia had their chance, man. They had their chance. They had their chance. They had their chance when the fall of the USSR. They had their chance. They had their chance. So. Yeah, the politics, dude. I agree with that too. I can't do the politics. I'm very like apolitical in a lot of parts of my life. From my service, my dad too. Very apolitical in a lot of this stuff. And I don't like politics. I don't like talking politics on the show. We're here to make money. Ultimately, right? It has to be tied to making money. Outside of that, we'll talk politics for money and stuff like that. But I hate politics. Politics is like one of the worst, most poisonous things today. You guys already heard me give these speeches, right? Social media is a fucking bane of the fucking world now. You don't know who you're talking to. You don't know who's doing the talking. You don't know the perspective of people. It's all fucked up. The whole fucking system's fucked up. I don't fucking like the Democrats. I don't like the Republicans. I'll be honest with you. In America, they're the same fucking wolf. Same fucking wolf. And, it's greed and money everywhere. It's filth. It's fucking filth. So you like even my own Democratic friends hate me for that. my own party hates me. My own party calls me a fucking traitor. My own party. It used to be a pretty good thing, right? Today it's just such a mess. It's like everything's just a mess. It's all money and power, money and power, money and power, money and power. Oh, and then we're gonna divide all the plebs. It reminds me of Rome. It reminds me of fucking Rome. The world does. Like we're gonna compartmentalize you. We're gonna compartmentalize you. We're gonna get you all angry at these people over here. Come on over here. You're gonna enjoy yourself. You're gonna love it. Here's your fucking, here's your echo chamber to make you happy. Drink the fucking Kool-Aid, and then I'll go over there and go fight with your fucking common man, your brother over there. It's fucking gross. Putting the plebs against each other. I got fucking Republican friends trying to fucking fight for fucking tax breaks for rich people, and they only make $50K a year. I go to jury duty, and guess who's at the DWI? Fucking Republican. I'm like, begging for lenience, but then they're saying throw them in jail in public. But they want lenience. It's just bizarre. It's all fucking bizarre. The whole fucking thing is bizarre. I want rehabilitation, but I want you to throw the rest of them in jail until I get arrested. Yeah, it's the oldest strategy in the book. Divide and conquer. Divide and fucking conquer. Absolutely. Divide and conquer. And they're getting smart at it. The internet age is like, they're getting really smart at it right now. Way smarter than they ever did before. I know. Yeah, that shit boggles my mind. That boggles my mind. I'm like, this doesn't include you. You got people that think they're upper middle class and they're not. You got middle class people that think they're middle class and they're not. You've got there's a disparity between wealth today, between wealth, right? Being actually wealthy and upper middle class it's like this. It's like so fucking far apart. It's the widest gap it's ever been. Ever. We're all arguing about giving them more. I'm like, no, anyways, sorry, I'm going to stop talking because it's going to piss some people off, but I'm not here to piss people off. That's a whole nother, I should do a different channel for that shit. Like I'll put a mask on, or I'll put on glasses with the fucking nose and the fucking mustache. You know what's really cool about that topic, though? You guys should check out like the tax system that Republicans had in the 40s and 50s. If you look behind that, right? And then look at the changes that were made in the 50s and 60s and then the 80s. Some stark differences. You know, like I like Eisenhower. Like I got no beef with Eisenhower. What did he tell you about the military-industrial complex, right? He had that great speech, didn't he? Big changes after World War II. Yeah. Change my voice too, right? Yeah, drinking in politics. That would be a fucking blast, wouldn't it? Just rip on all of them. I was watching Jon Stewart came out, right? So I got a funny story for you. So I watched Jon Stewart's first comeback broadcast. And I was like, dude, the Democrats have been drinking Democrats have been in this fishbowl since Jon Stewart's left. They've been in this fishbowl. And I'm like, they're going to be pissed off. And they were. I went on Reddit the next morning, and on Reddit they're like, he's just an old man. And he's more like a more pragmatic person, in my view. He's more pragmatic. I know about him with the $800,000 shit yesterday, but he's more pragmatic in his opinions. And he's like ripping on the Republicans, ripping on the Democrats, and I'm like, I love this. We need more of this. We need more of like call both of them out. Call them both out. Call them both out. I don't care about the $800 million. Care about the calling them both out. They both need called out. We're all sitting here in these bubbles. We're all in these fish bowls right now. It's like this concentrated bullshit. And I don't care about the 800,000 or the $13 million, $15 million home, but call them both out. They don't like that. The Republicans don't like it. The Democrats don't like it. The people in power don't like it. I'll try to find a book on this stuff. I got a book that I read about this stuff, and it blew my mind. It blew my mind. Some of the fundamental tax changes that happened in this country in the 50s and 60s, and then in the 80s. Yeah, it started in World War II. We used to have an income tax, and we got rid of it. We need an income tax, but it's fundamentally crazy to see. I don't want to talk about it now. We'll talk about it later. We'll talk about it later. I'll get you some books to read. Is this all we're getting here? We're only getting this? Can't even get a little bit? Can't even get a little bit? Yeah, see down here? Look at, they just said, fuck you. See right here? That's where the original buyers are right there. And they're like, that's all you get, Cap. You get that small tick, bro. This one right here. They gave me the tick. They're like, that's all you get. Price target end of day. Just under 525. What time's the market close today? 4 o'clock. Key. Key thing here. Number one, Nino, I'm going to reach out to you. As soon as I have a chance, I'm going to reach out to you, brother. We're going to chat. I'm going to try to see if I can get a conversation between John L., you, and I. Second thing, if you are in any spreads today, start closing that shit. Do not leave spreads open today. Do not. If you do, leave a spread open that's going to close today. Or if you have a leg of a spread that is in the money, you will get your ass assigned. They will fuck you between 4:15 and 6 o'clock. They're going to hunt you down, and they're gonna take your shit away from you one way or another. So be extremely careful. Look into the Discord. Be extremely careful into this close today. They come up the gremlins. Oh yeah, here we go. Oh yeah, look at that, baby. Trader Podcast dropping some bombs right now. David AMS dropping some bombs right now in the Discord. We got some straight bombs being dropped. Daler Chom exposure map forecast. Whew. Woo-wee. You think it drags us down right now or what, Trader Podcast? Or you think we're going to get that nice fat squeeze, baby? Yeah, 524. 527 last hour. Yeah, I see that. I'm looking at it right now. He's showing the Daler Chom exposure map forecast. That's what I'm seeing, man. That 524, that rip up. Oh, I'm gonna give you some uppies in there. More fire for you over there. Dude, Tony the Tiger's in there today. Hold on, I gotta. Oh yeah, what's going on, brother? Okay, so I gotta put this back here. The yeah, Trader Podcast saying we grind down then possible squeeze. Towards end of day though. Right there. I'll bring that one over there. And I'll put this up so you can see it. Put that up right there. All right, I'm going to get ready right now. I'll be back with you guys. I will be stopping. I'll be back in the stream, of course. If anything really doom and gloomy happens, then I will be back for that. I'll be here. I'm just going to pack my shit. I got to get my stuff packed for my kids. And what? I'll be back here. I'll be back here for 4 p.m. to say goodbye. We'll have a beer together. I can't drink with you today because I am traveling, but I will have a beer with you at 3:45 to 4 p.m. And we'll watch the close together. Remember what I said about that with your spreads. Please. There will be some fucked up funny business after the bell. Dude, even if price doesn't change, what these dealers do is they put you into blocks and they'll give you the worst possible result. Even if price doesn't show it on the chart, they'll do it behind the scenes. I've been called away before. I've had calls even close, just calls close, up 25 cents. 6 p.m. they rip them. Wake up Monday morning, I gotta call my broker and be like, "Hey, dude, you just took away 25 cents. I never closed the call, but I wasn't in a spread. You're signing me with these other things." They'll do all kinds of nasty shit to you. So please close your positions. If you have zero dates ending today, even if they're not sold, they're bought zero dates, close them today, 4:14. Do not let them run out into. But don't be like, "Oh, I own the call. They're not going to do that to me." That's bullshit too. They will. They scam on days like today. They scam shit today. They run so many scams today, it's not even funny. I've been told by everybody, if I own the call or the put, they won't do that. That's a fucking lie. They've done it to me. All right, I'll be back later. Good point there, Optimizer. Absolutely good point. Closing the cash, baby. They have done it to me. First time ever. Did it to me. They fucking did it to me. I had to call my fucking broker. My assumption here is that I got grouped in somewhere. There was like a mathematical error taken, and they just slammed me into a group. They set my calls to 0 after 4 p.m. I was fucking pissed. I was fucking livid. Well, like, oh, that was a mistake. That's what my broker told me. Here's your money back. And if I hadn't paid attention, it took me 3 days to figure it out. I didn't notice. I wasn't paying attention. And then I was like, hey, man, why did these go to 0 when they closed at, they think they closed at 25 cents or something. And they took it down to 0, and they didn't pay me. They're like, oh, that was a mistake. Because I know what they do in the background. All right, I got to go. I will talk to you guys here soon.
Today.
Welcome to Power Lunch, everybody. Alongside Julia Borston, I'm Tyler Matheson. Glad you could join us on this Thursday. Final trading day of the week and of the first quarter. The S&P 500 up 10%. Its best first quarter in 5 years, and we're going to look at some of this quarter's winners and ask the all-important question, can the gains keep going into Q2?
Plus, if you can't beat them, join them. Musical artists are embracing AI tools. We tried it out. Wait until you hear Demi Lovato singing about the S&P 500. We'll play that for you coming up. But first, let's get a check on the markets. We see the Dow is up just fractionally, just about 32 points. S&P 500 up just a hair, 4 points. NASDAQ down 24 points, just a hair. And here are the Q1 numbers for the major averages with only about 2 hours left of the trading hours left in the quarter. But Tyler, let's get over to what's going on with the markets. We've had a crazy strong first quarter.
Absolutely. I can't read those numbers. They're so small, but they're good. Nevertheless, they're very good. The markets have made a strong first quarter. At the end of last year, several firms, including Wells Fargo, Oppenheimer, and Raymond James, made NVIDIA their top pick. That worked out. The stock is up 80% in the first quarter. That's a good decade for some stocks. GE, a top pick by Deutsche Bank, is up 40% so far this year. However, Boeing was also a top pick on the street by Citigroup, Bank of America, RBC, and Deutsche Bank. Boeing down about 26% so far this year. Let's bring in Stephanie Link. She is Chief Investment Strategist and Portfolio Manager at Hightower and a CNBC contributor. She owns both GE and Boeing, one good, one not so good. Stephanie, it's been that kind of quarter, I suppose. I mean, generally the market is higher, but there have been pockets of disappointment, as there always are.
And that speaks to you always want to have a diversified portfolio because not everything at the same time is going to work or not work, right? So I think the encouraging thing this past quarter was that we grew more than expected in the economy. We just learned we grew 3.4% in the fourth quarter. Inflation is coming down, so you have decent top-line numbers, decent margin numbers, even margin expansion in some cases, and that led to 10% earnings growth. And I think that's probably likely to continue for some time. I think you could do about 8 to 10% earnings growth for the full year. But the most encouraging thing underneath the surface, and I know a lot of people are talking about it, but it's encouraging to see, is this broadening out, not only in sectors, but also style. So at February 9th, the Russell 1000 growth was outperforming the Russell 1000 value by 8.7%. That was huge. But fast forward to today, Russell 1000 growth is still leading value. However, that gap narrowed to 3.7%. So that's encouraging. So it's telling you that people aren't just chasing the growth names. They are looking for value. And oh, by the way, the XLE, the XLF, the XLI, all value sectors are actually beating technology year to date in terms of performance. And so I'm not saying abandon tech. I think you want to have some tech. I've been adding to some actually on the weakness, but I do think there are other areas in the markets that are getting more attention. And I think that's just healthier, Tyler.
And Stephanie, before
I want to bring something up to you guys here, okay?
Industrials, financials, and discretionary, and housing is your favorite subcategory.
So housing, first and foremost, I think the consumer is a lot stronger than people give them credit.
Start watching the... If you guys like the VIX, this is the VIX 9-day. 9-day VIX. Keep it on the daily chart here. But you see that VIX right there, 9-day VIX? It's a beautiful thing, isn't it? See that right there? 9-day VIX. Beautiful thing down there, isn't it? You guys see this 9-day VIX down here? You want to start getting long on vol? $2019. So they just peek the little heads up in there. Bam, bam, bam. Long vol crowd. VIX 9-day. It's the ticker symbol is VIX number 9 and then the letter D. VIX 9-day. This is, you can also recreate something like this with you can also recreate something with this with like SPX divided by the VIX, and you get a similar result. Oh yeah, look at Q's, man. Q's wants to mess around, don't they? This looks like it actually wants to go up, doesn't it? This looks like it wants to squeeze. Mr. looks like it wants to go up here. Mr. could trade 1854. Should I buy some calls right now? I'm not doing this. I'm not doing it. It's VIX 9. VIX. Go on TradingView. Do VIX 9D. Type that in right there. Any of you bears that want to get your VIX on instead of getting your price on puts, keep your eye on that 9-day VIX. All right, back with you guys shortly.
In a way, more confusing. Let's harken back to this morning, shall we? At 10 o'clock Eastern this morning, we saw University of Michigan final read for March. All three metrics, the headline, current conditions, expectations, they were all the highest levels since July of 21. Right there, you see the headline number at 79.4. Well, for tomorrow, we're all going to be looking at personal income and spending and all the metrics for inflation that are built into that series of data points. And yes, I will be here with Steve Leisman. We will discuss it even though the markets are closed. Go to CNBC.com. But maybe the most important thing I will be looking at is PCE year-over-year core. Our last look was 2.8. Really, it was 2.85. And what's notable there is, and that's a 10-year chart, it's the lowest level of inflation on that metric in 3 years, exactly 3 years. But it's still well above 2%, and therein lies the rub. Now, we've now learned that we don't need to be there to necessarily lower rates. Well, tomorrow we're going to see exactly where it is, and we'll redo all the metrics for the 3- and 6-month outlook. But at this point in time, 10 years where they currently sit are well above 388 where they close and a bit below 432, the high close for 24. Julia, back to you.
Thanks so much, Rick. Well, tomorrow morning, watch CNBC.com for the key data of the day, PCE, personal consumption expenditures. It is a key measure of inflation. We will be online with full coverage starting at 8:15 a.m. Eastern. Rick will join Morgan Brennan and Steve Leisman to bring you the numbers, the news, and the analysis. Again, that's 8:15 a.m. tomorrow on CNBC.com.
I was going to sleep in until you told me that.
You can now. You got to watch.
I'm going to be awake, setting the alarm for that one. All right, let's get over today's breaking news, and that is that FTX founder Sam Bankman-Fried has been sentenced now to 25 years in prison. Kate Rooney is live outside the courthouse with the story. Hi, Kate.
Hey there, Tyler. Sam Bankman-Fried was sentenced to 25 years in prison. That's the big headline for what U.S. prosecutors argue was one of the biggest financial frauds in U.S. history. It caps off the fall of the one-time crypto billionaire less than 2 years ago. He was living in a $30 million penthouse in the Bahamas and was really the face of the crypto industry. Today, he took a stand in a beige prison jumpsuit, pleading for the judge's leniency. Much more contrite, apologetic tone than some of the defiance and evasion, really, we heard from him on the stand when he was cross-examined in the fall in his criminal trial. He said today his actions haunt him every day and said, "I'm sorry." The judge today asking Bankman-Fried to forfeit $11 billion as part of that sentencing and admonished the 32-year-old, pointed to the, quote, enormous harm he did, the brazenness of his actions, and his exceptional flexibility with the truth, as well as his apparent lack of any real remorse. Also said he obstructed justice and committed perjury at least 3 times on the witness stand. He did say Sam Bankman-Fried was at risk of committing crimes in the future and said it's not a trivial risk at all, as the judge put it. Judge Kaplan also talked about Sam Bankman-Fried's risk appetite. He said his fraud was another example of his penchant for gambling. As he described it, he was found guilty, Bankman-Fried was, in November on 7 counts of fraud and conspiracy. His family today saying, quote, "We are heartbroken and will continue to fight for our son." His defense team plans to appeal, guys. Back to you.
So, Kate, I know there's still a pending appeal or the expectation of an appeal, but put this in context here. Forfeiting $11 billion, 25 years. How does that compare with other similar or similar trials and similar outcomes? And how much of that 25 years would he be expected to serve?
Yeah, so Julia, the big comparison has been Bernie Madoff, who was sentenced to 150 years. I'm told that was largely symbolic. He was 70 years old at the time. 25 years really was within the ballpark that legal experts expected. I spoke to Mark Litt, who was prosecutor in the Madoff case, and said that is pretty much in line. It's much lower than the sentencing guidelines, which had a maximum sentence of more than 100 years. So this was sort of the expectation. He is significantly younger than Bernie Madoff, 32 years old, and that was something the defense talked about today. He's still in the prime of his life in a lot of ways. He's a very intelligent, promising young individual who committed massive fraud, and they said there's a chance for him to do good in the world. The judge saw it differently and said there's also the chance for him to commit another massive fraud, which he said really was a real risk. Elizabeth Holmes would be another parallel. She got 11 years. That, I'm told, was really the floor. Most people did not think he would get anything less than a decade or 11 years.
How, back to Julia's question, how much time is he likely to serve, and where is he likely to serve it?
So in California, potentially. His family is in the Bay Area, so they said that they will likely choose a prison around San Francisco. And it depends, good behavior, parole is something to take into consideration, but it's about 85% of the sentence is typically what happens in these federal crimes, that they serve the majority. So he is expected to serve most of that sentence, and then there's an additional 3 years where he's sort of under surveillance. But it will be the bulk of that. So yeah, he'll be potentially 50 or so when he is eventually released. But there's some possibility for parole and things like that. But it's a little bit different in federal guidelines. But we'll see. It's quite a long time, not necessarily a life sentence.
Did I hear you correctly that he's been asked to return some $11 billion as part of this?
$11 billion.
Billion.
Yes.
Does he have it?
That was my big question, Tyler. We're still kind of parsing through this, but he has said that first of all, his legal bills have got to amount to millions. He's spending on that. There's also a separate lawsuit from the bankruptcy case, and the current FTX, John Ray, who was in charge of the Enron bankruptcy, is running that and has sued his parents for clawbacks. And there's other lawsuits going on, so it's unclear where he's going to get that $11 billion. He also thought that he could have moved money offshore, but that is an eye-popping number for somebody who claims that they probably don't have it.
All right, Kate, thanks very much. Kate Rooney reporting from the courthouse.
Thanks, Ty.
And coming up, we're going to do some bargain hunting in retail, but no, not the clothes. Dana Telsey will share some cheap stocks to buy. Plus, TikTok buying ads on the platform had helped disrupt traditional TV, all to prevent a potential TikTok ban. And we'll take a look at the growing uses of AI in the music industry. All of this when Power Lunch returns.
Or download the app.
Welcome back to Power Lunch. Consumer sentiment hitting its highest level in nearly 2.5 years. But with inflation still high, our next guest says she's seeing the consumer trade down. She's out with a list of 6 retail stocks that look like bargains. Here to reveal those names and give us a read on retail overall is Dana Telsey, Chief Research Officer and CEO of the Telsey Advisory Group. So we were just talking during the commercial break, and you said right now the consumer is squishy. What do you mean by that?
What I mean by that is every day it's different. One day it's strong, one day it's weak. Macro news is flooding the landscape lately, and I'm seeing companies have lean inventories, and the consumer, with inflation still high, interest rates first yet to come down, they're very, you can call it discerning, choiceful about how they spend. So each week and each day, whether good, whether bad, they're very choiceful in how they spend from all income levels.
So tell us some of the names that you think are really benefiting from the trade down.
I think you have the off-pricers that are benefiting the most from the trade down. The TJXs, the Rosses, and also Burlington. You also have the discounters that are benefiting, along with some of the dollar stores. And the interesting thing, particularly about the off-pricers, they typically generate a 3% same-store sales increase. Lately, it's been above 3%, 5%, and even 7%. What that means is they're getting the benefit of more consumers who are shopping their stores.
I am very curious. And you mentioned the off-price stores. The stores I'm going to mention are anything but off-price. It's the big classic department stores, the Macy's, the JW Nordstrom. I wonder what you think the future of those stores is. And specifically, talk to me about what you think is going to happen with Nordstrom, which may or may not go private.
We're having a lot of change going on in the department store sector. They're catching up to, frankly, what retail needs to be today. You take a look at what Tony Spring is doing at Macy's, who's spent over 30 years at Bloomingdale's, and enhancing the assortment. Look at those store closings that they're doing. If, let's just say, around 150 stores generate 50% of Macy's sales, and there are 500 doors, closing 150 stores is the right thing to do because you want to optimize the stores that you have.
That are making the money.
Exactly.
That are delivering the money.
They're contributing.
Concentrate on those, get rid of the rest of them.
Right. You take a look also at what these stores are doing with merchandising. Certainly at Nordstrom, you're seeing more unique brands that are coming in there, things that are unique to them. At Macy's, take a look at what just launched. They just launched G3's Donna Karan label that has been reinvented, and frankly, to very good fanfare. So how are they going to be new and different to drive traffic? I think it's traffic and then conversion in AUR, and that's average unit retail selling price. I think you're in the beginning of it, but in the meantime, these off-pricers have the goods, they have the brands, and they're very compelling.
Will Nordstrom go private?
Can they afford to go private? Are they going to be able to pay off some of the debt with that? Something that remains to be seen. The rack business has been stronger than the full-line business for Nordstrom.
Nordstrom rack.
And I think it's being explored.
On the other end of the equation, I want you to give us some more insight into the luxury business, because you say that despite these tough comparisons, luxury goods sales are actually above 2019 levels.
Yes.
So among the luxury retailers, are some of them better positioned than others? Are there names which you actually think might be undervalued in this market?
So when you look at luxury goods, the king of luxury goods is LVMH, with over 75 brands, and frankly, in all different categories, from hospitality to Sephora, and of course, their key brands like Christian Dior and Louis Vuitton. They're one of the ones, they're going to get the benefit of the first pickup out there. When the Chinese begin to travel, when they begin to spend more on some of the accessories, they'll be a beneficiary, and their unique creativity drives that. When you look at other names out there, you take a look at Tapestry, and I just spent time with the management there. The Coach brand is delivering higher average unit retail selling prices and, frankly, gaining share. The Tapestry Capri acquisition, still on the come, but the confidence level in them being able to integrate Michael Kors, integrate the other brands, and deliver profitability is higher today than it was when they announced the acquisition.
Give us 3 stocks that are on your sort of A list. I'm not asking you to choose your favorite children, but I kind of am. If you had to, you've mentioned some of them,
Right.
I can anticipate, but go ahead.
I think Bath & Body Works, with some of the new categories that they're introducing, the shift to off-mall, I think the valuation's compelling, and they have 40 million people in their loyalty program. Take a look at Ralph Lauren, expanding the purview of their customer base, focusing on other categories like outerwear, like accessories, like home, that's a real driver for them. And I take a look at businesses, for example, like Ulta. When you think about Ulta with their cosmetics range, mass and prestige, it's a driver. And let's not forget TJX, who, when you think about off-price, they dominate, and they're continuing to dominate.
Well, certainly a good note to end on there with TJX, a discount retailer. So thank you for giving us some insight into the retail bargain stocks.
Thank
Dana
you.
Telsey.
I want to go spend a day with you someday.
Let's go
We talked
shopping.
about this last time.
I know.
I would
Happy to
like
go
to do this.
shopping.
Just go and hang with you and go see what you see and see what you like and don't like in various stores. We'll go to several.
Get on your comfortable shoes and let's go walking.
Go to a mall.
Yeah, we'll go to a mall. Or
Garden State's not far away.
I know. It's like that one in Riverside, my favorite malls.
Yep.
Thanks, Dana.
Thank you.
See you. All right, still to come. Home Depot moving past simple home improvement and betting big on professional contractors. We have the details of that switch next.
NBC.
Well, as mortgage rates have shot higher over the past couple of years, it's caused a slowdown in the housing market. With fewer homes being sold, you got fewer people fixing up their homes to sell them or renovating homes after they buy them. That's creating a problem for Home Depot. A decline in the number of do-it-yourself projects is forcing Home Depot now to go after the contractor market, which it is doing with its biggest acquisition ever. Melissa Repko joins us now with more. Melissa.
So today, Home Depot announced that it's buying SRS Distribution, and this is a company that specializes in selling to suppliers that do projects like installing pools, doing landscaping, redoing roofs. And it's worth noting that pros are already a big chunk of Home Depot's business. About half of its sales come from pros, but these are pros that are bigger, and they really want pros to come to them for top to bottom supplies, not just for, running in like treating Home Depot like a convenience store in the past. They want to get a bigger chunk of business.
And so how does this play into the trends we've seen in Home Depot sales over the past couple of years? Is this an obvious solution to challenges they've had?
It's really the latest puzzle piece in Home Depot's strategy. So, of course, it's a tougher housing market, and there's been a dramatic pullback in the spending on DIY after the pandemic. But also, Home Depot sees the opportunity here. It's really an untapped market where it can get more sales from pros, which are just more reliable. A lot of us may not complete the project we started our home. These are pros that, their career depends on it. And so they're placing just a more lucrative order. And if it could really move the needle at a time when the forecast for Home Depot is pretty tepid.
And what about further differentiation between Home Depot and Lowe's? Is this a piece of that?
Yes, with Lowe's, actually the pro business is pretty small. It's only 20 to 25% versus Home Depot, which is about half. I spoke to CEO Ted Baker today for Home Depot, and he was saying that this will be meaningful in shifting that 50% to 55%, and it could even get more significant over time. That being said, Ted Decker told me he still wants to go after DIY customers. So they're not giving that up. They're just trying to be strategic about taking advantage of both pools of customers. And obviously these pros, like I said, they're more reliable because they're not as likely to not do a project because of the weather or other factors like that.
And they're going to keep coming back. I mean, the DIY person might do their project and be done for the next 5 years. The contractor is going to be coming back because that's their business over and over again.
Exactly.
Let me ask you this question. You mentioned this acquisition, which certainly is one way that Home Depot can expand in the contractor market. But how do you do that? I take your point because when I go to a Home Depot, you see people who are clearly professionals, but they're not there buying for the full job. They're there because they're short a few pieces of lumber, or maybe they need some drywall spackle or whatever.
Exactly.
So how do you take that person and lure them away from the classic building supply company that they've been doing business with for years?
It's a whole new muscle for Home Depot to learn. And actually, that was one of the things that Ted told me, Ted Decker, the CEO. He said, look, they're not just gaining a book of business from SRS, they're also gaining some expertise because this company they're acquiring has 4,000 delivery trucks that can get lumber and other things like that to a job site. And he also said they just know how to run a business and they have the relationships with specialty pros that Home Depot may not have.
This is their biggest acquisition by far. Are there any concerns about integration or the fact that this might be a big and hefty and perhaps distracting project to merge these two companies?
That's a good question. I mean, we know we are in a time where regulators are scrutinizing deals more closely than they were before. And, Home Depot's leadership, Ted Decker, said that he does feel confident the deal will go through because it is a very different kind of business than Home Depot's been in. So it's not the same base of customers. It's not really the same thing. So he feels confident that they can close the deal by the end of the fiscal year, which would be by late January.
Fascinating stuff. Melissa Repko, thank you so much for joining us.
Thank you.
Now let's get over to Kate Rogers for a CNBC News update.
Julia, the United Nations top court today directed Israel to take measures to allow more humanitarian aid into Gaza. The International Criminal Court of Justice unanimously ordered the Israelis to take all necessary steps to ensure basic food supplies are delivered without delay. The order was requested by South Africa as part of its case accusing Israel of genocide. A 22-year-old man charged today with first-degree murder in a stabbing rampage that killed 4 people and injured 7 others in northern Illinois yesterday. Police say the attacks happened within 20 minutes of each other, and the victims included a 15-year-old girl and a postal worker. Police say the motive at this point is still unclear. And New York Mayor Eric Adams announced today that the city is opening permit applications to test autonomous cars. But there are some conditions. Companies need prior experience testing in urban environments to get approval, and there must be a safety driver in the car at all times. Julia, back over to you.
Thanks so much. Meanwhile, TikTok launching a $2.1 million ad campaign with one goal: to block its ban. That story's coming up next. or download the app. Welcome back. TikTok fighting back against the potential ban of its platform, launching a $2.1 million advertising campaign. CNBC.com political finance reporter Brian Schwartz is here to discuss that story. Brian, explain to us the argument that TikTok is making with these ads and how important TikTok is for its 5 million businesses who use it.
Well, that's exactly actually the argument that they're making, the importance of TikTok for their users, really in part at least connecting that message to the impact TikTok has, at least in the company's view, on small businesses. And you have to understand, many of these TV ads are airing in states where there are at least five Democratic lawmakers up for re-election right now. These are ads airing nationally and on local TV, areas. And this is really key in terms of the tactics of how they're going to be lobbying as this bill is being reviewed in the Senate. Chuck Schumer has said that it's going to be reviewed. And the question now is this thing really going to move forward to the point of what the House bill had created and passed? Remember, the House bill in its form was that if it was actually signed into law, it has to get to the Senate to do that. ByteDance would have about 6 months to divest this thing. And if they didn't, TikTok wouldn't be allowed on U.S. phones, and it wouldn't be allowed to be downloaded going forward. So, the message is very clear. It's to be, pitch this concept that TikTok is for everybody, can be used by small businesses.
And also pitching that it's great for the economy and local businesses. My question, though, is what's the call to action here? Is TikTok imploring people to call up their senators and say, don't vote for this bill? Is it that clear?
I don't think they're saying it that way, but they are, using, I think that the call to arms here is to basically have users speak out more and more on the importance of TikTok in order to, in a way, push lawmakers not to go ahead with supporting this bill. None of these ads, at least that I've seen, have said, call your lawmaker or do anything of that sort. But beyond the TV ads, let's keep this in mind. What the company told us that there is going to be a digital ad component to this. There's going to be a billboard component to this, where at bus stations and train stations, you are going to see this concept of the importance of TikTok. And that's all part of this over $2 million advertisement buy.
So let's talk about the bill itself. It passed with a large bipartisan majority in the House. You suggested earlier that some of these ads are targeting states where Democratic incumbents are up for re-election and may find themselves in tough fights. Why would they be targeting the Democrats? Is it because they think the Democrats are more persuadable than the GOP members?
I think that's possible. I think, when you look at it from a political standpoint and connecting it back to this policy, frankly, the idea could be that these people who are up for re-election, these Democrats, they could be more persuadable just because they're up for re-election right now. I mean, some of the ads are airing in Ohio. Sherrod Brown, the very powerful senator from Ohio, is up for re-election this year. So these are some key players in the Senate within the Democratic Party that represent these states. So the theory could be, if they keep airing these ads in these states, these senators represent those areas, that maybe they can kind of turn against the bill a little bit. Maybe they'll just dissuade them enough where, this bill may not even get to the floor. Remember, we're not even at that point yet. They're still apparently reviewing this thing.
What has Schumer said about that?
Well, that's it. I mean, so far from what I've seen is that it's this idea of reviewing it, that they may have a public hearing about TikTok. I read somewhere that the senators have had briefings about this, but we are not at the point yet where anyone's calling for this to be brought to a full Senate vote. So I think this could take a matter of months, and for TikTok, that's an opportunity to run these ads.
Well, $2.1 million now, but my question is, what's next? Will we see them ramp up and spend tens of millions of dollars on this issue? It's clearly high stakes for them.
Well, they're telling me that it's more than the $2 million that have been tracked through Ad Impact so far. So there is going to be more spending here. That's what the company is saying. And the idea here is that I just think they're going to keep hitting these points over the next few weeks through April. And look, as we get closer and closer to November, I don't care what the policy is, they're talking about TikTok or something else, lawmakers are going to start focusing on the re-election effort. So if they can drag this out the company and keep pushing back and delaying this, then maybe there's a chance to just keep running this back and holding on to it for a while.
What is the small business use of TikTok? How do small businesses use it? They advertise and then you click through to their business? Is that it?
That's what I've seen, at least. That's right. And these, again, the ads, when you look through the spots, they're apparently bringing on people who have small businesses that use TikTok in the exact way you just mentioned it. And listen, it could be a compelling message for a lawmaker from, let's say, Montana, right? That's one of the states that's these ads are airing in. And so, this is something that we really had to keep an eye on, because if these senators start to waver a little bit, that could be a win for TikTok.
Yeah, we're seeing the ad just run on our air, the hashtag Keep TikTok. They're trying to get the message out there. Brian Schwartz, thanks so much for joining us.
Thank you.
Alrighty, coming up, facing the music, recording artists are now leaning into AI tools for productions, and we wanted in on the fun, so we figured we'd try them out too. We'll play you a special tune when Power Lunch returns.
To learn more.
Welcome back. More than 2 decades after piracy upended the music industry, a new challenge has emerged: artificial intelligence. As part of our ongoing series, AI Impact, we're examining how the music industry is grappling with how AI is going to impact its future and trying to get out in front of AI disruption. This may sound like Demi Lovato, but it's not. It's an AI-generated song created by YouTube's Dream Track tool, part of Google's latest experiments in generative AI. The company is partnering with record labels, including Universal Music Group, to create guardrails to protect artists' voices from being exploited and to enable them to profit from custom AI-created music.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then
Dream
sign up
Track,
today
which is
and get
being
our
tested
special
as an
offer of
integration
Financial
into
Juice Pro
YouTube's
for a
TikTok
year's worth
rival,
of our service
YouTube
for the
Shorts,
price of
allows
1 month.
creators to
and
make
save
AI-generated
92%.
songs with the voices of famous artists. 9 big-name artists are participating and being paid for their participation by YouTube, from John Legend to Demi Lovato and T-Pain.
Drinking tequila, hanging with my friends.
Yeah, AI is crazy, bro.
I got 1,000 people watching me.
Bro, I ain't made a song like this in years.
We were the first TV journalists to demo the new tool alongside Melanie Wilking, a YouTube creator who's part of the initial test. And we asked Dream Track to create us a song about the stock market. 2 decades after music piracy threatened the music industry, it's facing another reckoning as music labels and artists decide whether to embrace the new tech or risk being left behind.
We have to figure out how to effectively partner to drive innovation, to be able to adapt to new technology. I think you'll see that we've worked to try to understand where the opportunity is and to get out in front of it.
YouTube wasn't the first to experiment with AI-generated music. Last year, the artist Grimes invited her fans to use Gen AI to create songs in her voice. If the songs are a hit, she says she'll split royalties with them. As to when YouTube's Dream Track tool will be widely available, the company's still working on it.
We know that there are challenges and a lot of work that we need to do to get to the place where we will be able to fully scale a product. In other words, it might take some time before you have the ability to make your own song.
In the meantime, 100 of YouTube's creators and their millions of fans are getting a window into what the future of custom AI music will look like.
One thing that was really surprising about this Dream Track demo was how quick it was. It was almost instantaneous for this generative AI tool to create the music. So, Tyler, it's amazing to think about what's going to happen when these tools are widely available at scale. And instead of just having a custom playlist, you might have a custom playlist full of all custom music.
So it writes the lyrics, it composes the music, it merges them. And in this experiment, it is using the licensed voices of artists like John Lennon, Demi Lovato, and more.
John Legend, yeah, Demi Lovato, yeah.
John Legend.
Yeah.
I date myself.
And it really sounded like them. I mean, it sounded like they were singing a song, but I've never before heard a song that includes lyrics about the NASDAQ and S&P 500.
Yeah, and
so
NASDAQ, you're so hot.
Yeah.
I don't know, man. But so what happens if these things become a hit? If one of these songs becomes a hit,
if they then
who owns it?
Well, the Universal Music Group, the record label, is part of this experiment. Right now, YouTube is paying to make sure that the artists are compensated for the use of their IP. But down the road, remember that YouTube is a massive business. You'd be able to benefit from advertising. You might have a subscription fee involved as well. So the idea is to really monetize these AI voices and make sure that these artists are participating in the profits around their success and not just having their voices stolen.
Did the content creator there, did you think any of the songs that you heard that were created this way were any good?
Well, they were definitely catchy, right?
They were?
Yeah,
Okay.
there was a catchiness and a beat. And to me, I was just shocked how quickly they were generated.
Yeah.
And also, if you didn't like one, you can make another one pretty much instantaneously.
Really interesting stuff. Wow, the world is changing. Julia, thank you very much. All right, coming up, best in class, our trader will give us her take on some of the top market performers so far this year as the first quarter of trading comes to a close. It's been a good one. Power Lunch is back in 2.
Reds.com.
Welcome back, everybody. Time now for Three Stock Lunch. We are going to look at some of the best performers of the first quarter. Here with our trades is our friend Ava Ottos, CIO of ER Shares. Up first, Meta Platforms. Ava, Barclays reiterating its overweight on Meta. The stock is up about 37% this year. That's a good year, not just a good quarter. What's your trade here?
It is a good year, and I still have it as a buy. It has been a long-term hold for us. We've been in it since the beginning, and we like it because actually it's one of our favorite Magnificent Seven because of their huge moat they have. We need to remember 77% of online users are at least on one Meta platform. That accounts for 3.6 billion people. They have the top net income margin in their area, which is 29% compared to -1 for their peers. And they have among the best EBITDA margins. That's 46% compared to 4%. Fundamentals look great on a relative valuation. Again, it looks great that their enterprise value to EBITDA is 20% below its peers. It's a clear buy, and it's a long-term hold for us too.
And up next, Disney. Shares have been rallying on analyst optimism. Disney having its best first quarter since 2000, up about 1% today and up about 35% so far this year. And of course, we have that big shareholder meeting next week. Ava, what's your trade on Disney?
Well, it's on the news because of the DeSantis and Disney settlement. There's no more any legal overhang. That's very good news. And I think investors are excited about this. But we need to remember, they're a long, long way since pre-COVID numbers. They used to make $12.5 billion in profit. Now they make $3 billion. So there's a big drop in their profits. They're on a relative valuation. They don't look that good. Their PE is 74. That's 74. That's extremely high. It's double their peers. And most importantly, they're making much less money on much higher revenues. Their margins are 50% below where they used to be. And their revenue is actually the highest it has been. So things are not running as efficiently as they used to. It's a hold.
All right, let's move on to the last one. Eli Lilly, this one also a top performer in the first quarter. The company having a banner year so far. The weight loss drug Zepbound expected to become one of the best-selling drugs ever. Shares are up about 35% just so far this year. Are you overweight on this weight loss drug or not?
Not overweight at all. I have it as a hold in the best case scenario, if not a sell. It is traditionally a slow moving area, right? These are big companies. There's no high revenue growth traditionally, but now we see high revenue growth just because of their obesity drugs. They're growing by 20%. Their average of the category is 2%. So their revenue growth is great. It's not as high as Novo Nordisk, which we like more. But the stock, most importantly, in the last 3 years has come up 4 times. If you compare it to the revenue growth, which has come up 50% in the last 3 years, there is a big inconsistency on how the revenue is coming up compared to the stock price. So as a result, their valuation is very elevated. Their PE is 134. That's 4 times their peers, and their net income is not as good either. So if you could get into Novo Nordisk, which is not trading in the US, we would sell and get into Novo. If not, it's a hold, but like eventually we would sell.
Very interesting. Ava Ottos, thank you very much. Great, as always, to see you. Have a good weekend. Happy Easter.
You too.
And coming up, we'll power through as many more headlines as we can in closing time. That's next.
Bounty.
All right, just 2 minutes left in the program. We got several more stories we want to tell you about. Let's get right to it. Let's talk about rent. Prices for 1- and 2-bedroom apartments grew in March for the first time in 6 months. This is according to Zumper. The average monthly rent on a 1-bedroom apartment rose to nearly $1,500 on average nationwide, while a 2-bedroom rose to more than $1,800. The only state statewide to see rents drop across the board was Arizona. Not sure what is unique there, but all the major areas assessed statewide level, the median price there declined to $1,311 in April.
I wonder how this relates to the conversation we were having earlier this week about housing and tight inventories, the fact that mortgage rates are still fairly high, starting to go down, but not down enough.
Not down
some
enough.
Interplay there.
All right.
Meanwhile, CNBC Make It highlight.
think we have some form of control still, making our constant binary choices and voicing our equally shallow opinions more loudly or quietly. Most people can't even decide what color to wear or which burger to eat. What does it matter, man? Autonomy is an illusion. Autonomy is an illusion. Autonomy is an illusion. Most people can't even decide what color to wear or which burger to eat. What does it matter, man? Autonomy is an illusion.
She said he was calling my name. She was naked up against the bed frame. It's a safe bet this will happen again. So
hell is this song?
Take a moment right here, feeling like it's out gear. Driving towards the sun with a rose and a gun. Feel the wind in my hair, going nowhere I swear. Like an outlaw on the run, dangerous but it's so fun. Running, running, no. Hold on, don't let go. Running, running, no. Keep running. Told my boss that I'm done. Had no luck with my mom. Say, what will you do with your life? You know it's hard to survive. A cigar in my mouth. Maybe guilty but proud. Now I'm an outlaw on the run. Dangerous but it's so fun. Running, running, no. Hold on, don't let go. Running, running, no. Keep running.
is the future. Evolution. This is the future. Evolution.
All right, so right here, just want you to watch this right now, really quick, how it's playing out. Okay, so like you can see the sellers or the supply to the upside on Bookmap up there trying to sell down on you. You see the green balls on Bookmap. So what you're looking at right here, right now, is, or what I'm drawing out for you above, is a few important things that you need to note. This is the initial thrust up down here, right? You have the push up, first push up right here, right? So you blast up here. Get the initial push up, right? Squeeze up higher. Come back down. We own the 1 minute. See that? This is bullish here. You've got buyers just stepping right up on that 1 minute trigger. So they're pushing you up now, and you blast up, right? And they're forming a base right here. And what they're telling you is that there's bulls here. This 1 minute hold means that there's strength in buyers, big strength in buyers. Very dangerous for a bear right now. So now you see the break above that's taking place in real time. You see how that just happened? And they're going to get up here, or try to get up here on R1, right? And so when they get up here in this R1, they're going to break up here, consolidate down here, grab that 1 minute trigger again, and possibly check the 5 minute trigger that's right there and blast us up even higher. So right now, it's very extremely bullish right now. We could just squeeze straight up. Like we could just go violent straight up. And the reason that you know this is because of this right here. This candle right here, that candle is go fuck yourself. Go fuck yourself right there. And that tells you, see how the immediacy of it? Blast up, come back down, and immediately get bought. So just watching all of that, you have to hold this green line right here, which you did. And now they're pushing you up on top of R1. And this is aggressive buying here, aggressive buying going on. You should consolidate this now. Watch how it happens. I'm actually showing you as it happens in real time, right? Bam, bam, bam. That's this right here. Bam, bam, bam. Now you're above the 1 minute trigger. And if these buyers are still here, see that little fucking reversal candle right there? They're going to step right back in here and try to push this thing back up. Now, does it mean we're going up all the way up here right now? No, but it does show a path for you to see. Whenever I draw these things for you, they're not meant as, yeah, we're definitely going there. It's what you're looking to see happen for us to go there. So if we do fail that, if we end up failing that, you'll know where we go next. So if we begin to roll down here, get underneath this and start heading lower, you know what to be looking for. You know what to be looking for the failure, and if we start to head back down to the other side. But right now, this is extremely bullish. You see how they're consolidating this right now? We should get a little bit of consolidation. Bam, bam, bam. Then they're going to push us right back up, right? You'll check where those buyers are either right here or they are right on this 1 minute trigger, and we'll go blasting straight up again until we. Now, the reason, and this is the other thing, you want to see the failure on like 524. See that big 524, 50, 60 in here? You normally don't get straight up there above 525. Then you have to look for more push to break above the actual 525. That's a lot of strength right here. There's a lot of danger for sellers right here. They're about to get run over. You can actually see it. There's aggressive buying going on right now. Aggressive. Aggressive. I didn't think they would do more. My assessment for today was to expect 524 with a failure, possibly get above 525 and then come back down or pin it into the close. I'm not expecting 530 today, but this looks so aggressive. It makes me wonder if we're going to get straight up. Let me show you this down below here. It makes me wonder two things. So here is 520. Here's 520 or 5275. Okay. So here's 5275 right here. Okay. 5275 right here. So take a peek at this. So you should be able to come up here and squeeze this up, but you'll likely fail. Or you're likely going to get up here, consolidate, and fail. Now, if we break above and we get a new high and consolidate, right? If we do break above, you're never long in here. You know that, right? You don't fuck with this here. You never fuck with that. You're fucking with this part of the trade. Because if they fail this up here, you don't want to be diddling up there, right? It's almost as bad as diddling in the middle. Because if we're breaking up here, what do they do to you? Often, right? 50% of the time, what do? Big red bar straight down, right? Even you might be like, oh, this one time they didn't though, Cap. Yeah, but you run in predictions and probabilities, you'll lose more than you win. So the idea here is that we're going to trade up, possibly fail here, or get above and consolidate. I didn't think they would do all of it today. I figured today would be like 524 and a half, maybe 525 and a half. Maybe they want to do it though. Maybe they want to be like, you know what? The fucking weekend's coming. We're going to smash this thing straight up. We're going to do that into the closing bell, just ramp-o-rama. Trade it sideways in the next week, come back on Monday, and what do? Boys are back from vacation. They take their money and they run. Now, do I think that's going to happen today? I have no idea. We have the best information available. Now, remember what I said, right? Where are they? They're right here, right? So we draw the box, right? That's where the bulls are. We know where they are. Let's go back and look and see on the main screen. Where are we? There's your green box right here. Right? This is the basis for higher highs. This is where your buyers are right here. So as long as these buyers are here, where are we going? Where are we going? Look at them right here. Look, they just did it right now. Let me move that over so you can see it. Do you see it? You see it right there? Consolidate, retest. See the retest? Successful retest. Where's next stop on that? Next stop on this retest should be what? You got your retest right there. It just happened. So where does that send you? Sends you up to where? We got buyers here in demand. Look at them. Fucking beef. So where does that mean we're going? Probability, high probability, right up here to 525. Or at least a failure of it. How about 524.80? 524.80 expectation for next move to the upside. So this one right here can be here or here, somewhere in there. What do bulls want this next one to be? They don't want it to be here, do they? If it's here, they get rolled to the downside, right? Sorry. If it's low, they get rolled to the downside. So if you're a bull, you want to see this next push go above 525. Let's see if they can do it. Right now, it looks like they're going to get it done. You see that right there? That's a lot of fucking buying right there. Guaranteed there's some pissed off. And this next two candles right here, they want to get above right here. Right there, they want to get above. So let's see if they can get above, catch that new high, and run it up. Woo-hoo! Do you want me to leave this up for you down below for a little while? This is SPX Gamma. I can pause the bottom left-hand side so you can maintain this. Just keep an eye on this. It's a 30-minute candle right here down below. By the way, these are 30-minute candles, and you want to be watching this with the clock right now. You want to watch the body of this candle down below, right in here. See what this action is right here. See him trying to pound it down, pound it down, pound it down. They want to break that so they can go boom underneath and send it right back down to where the original buyers were down here. So keep your eyes on this right here. Where do we go if they win this battle right here? On this structure, on this 1 minute. Where do we go if they win this, if sellers win this? We go all the way back down. If they win this battle right here in this green bar, where do we go? We go all the way down to the start. And this was at, what time? 1:30 in the afternoon. So 1:30 in the afternoon is right here. So watch as this plays out. 1:30 in the afternoon is right here. Keep your eyes on this green box right here. And they are pissed. So if you see a new low, actually this is wrong too. It's right there. It's right there. I think I got that right. It looked like there's the bottom tick right there. They were buyers right there. I'm getting a little sloppy on a Friday here. And if you want to know where the targets would be to the downside, I'll show them to you. First target would be right there. Second target would be right there. And your next target would be 1:30 in the afternoon right here. So if this is lost, hit that one, and then straight down there. Big green box. This is super important right here. I don't like that color. I like that color. Oh, yeah, there it is right there. Nice green box. Pissed off, man. Woof. Angry. Oh, they're trying. See that dip down there? They are trying. Anger. Anger. Sauciness. Saucy, baby. Saucy. All right, let's play this music. Gotta be right back with you guys. This makes me want to buy some calls right now, I'll be honest with you.
This is the future. Human error. Evolution. This is the future. Evolution.
I look at people and I wonder all day, who are you and you are not the one in your way. And then I think about myself and I state, I'm a pretty boss, work almost your brain waste. I'm a freak in the sheets, but I got class. I'ma grab an ass if you want it. Best you ever had, give it to you fast. Ooh.
Remember here, bulls can still do this. They just need this high right here. See this little yellow box right here? They just need that high. So if you see the bulls come up here and they come up here, bam, right back down, they'll be right back up there again.
Take you on like a big deal. Eggs you can unseal, key in ignition. Just keep me full like I had a meal once in a while. Feel alright. I know you're
hot. Nice action.
can't fight it. I'ma let you ride the wave. I'm New York and you're LA. Come together, feel the shock waves.
Dude, there's like I'm out here. Oh my God, there are no fucking homes. Like I can't believe how many no homes there are. There are no homes available out in the market. There is like nothing anywhere. And the stuff that's out there, oof. People want a lot of money for shitholes. Shitholes. I'm here doing some work right now in the background. I got to get done before I leave, and I am blown away at the literal shitholes that are. Hold on, I gotta go over there and look at that. Literal shitholes. There's good stock for like. There's good stock for. There's a lot of good, like, if you'd bought homes pre-COVID for rent, but for sale, I'm talking about homes for sale. There's still some decent properties, but, dude, I mean, you had to buy this shit all pre-COVID. There's a lot of, like, higher-end stuff that is way fucking overpriced. Like, out of fucking control overpriced. I am blown away at the housing market right now. And there's nothing available. So if you start to grind down into, like, I'm looking specifically for these things, it's even less. Oh, I should have bought that bar right there, dude. I should have bought that fucking bar. Should I trade or no? I want to trade. I should have bought this bar right here. I should have bought that fucker right there. That motherfucker right there. See that thing right there? I should have bought that thing. That's a hot bar. Hot bar. A lot of risk on that bar, but it's a hot bar. The thing is beautiful. Like that sexy thing right there. Like that's the shit I like to buy. It's dangerous as fuck, but this is how you trap. This is where you trap bears right here. 1 bar, 2 bar. If this thing turns green, boom, trapped them in, boom to the upside. Very dangerous though. Very dangerous bar, but hot nonetheless. Hot nonetheless. Little bit of a test on that 5-minute trigger down there. Trap in some bears, boom to the upside. It's also where I lose all my money. This bar right here, this one right here is where I lose all my money. Whenever you see Cappy take a bad trade, it's on that bar right there. Hot bar. This housing market's fucked up. Like there isn't a, when you get down in the nitty gritty of this housing market and you like start to be like, yeah, I want this, I want that. You start whittling it down and there's like 2, 3 available, 4 available, 5 available max. I'm looking at whole states right now. And I'm comparing across the country. Like I'm looking here, looking there. And it's the same situation everywhere. It doesn't matter where it is. I'm really wild out. Wait, where's that one? I'm really wild out by that there's the housing stock available. I know we're early too. So I'm watching this shit like a hawk right now because it's March 28th. Any of you guys in the housing, have you got any guys like flippers or buy and holders or anybody ever looking for a house? Like we're coming right into the, like everybody should be listing right now, like into like next weekend. Start seeing houses coming on market, and the housing market is still stupid fucking tight. Stupid tight housing market right now. I want to know if people believe Utah. So I'm from Utah. I spent a lot of years living in Utah, and I cannot believe right now what the Utah housing market is. I check them right now every week or so. Watch out! Watch out here. We're losing some. Is there a report coming out right now? There's some liquidity leaving the market at the moment. Be very careful here for a blast to the downside. The Utah housing market is insane right now. It's stupid. So I used to own a house in Prospector Square. Up in Park City, right? And if you had like a duplex or something, you rented out a side of your duplex or whatever, you were getting like about, I don't know, 5-10 years ago, you were getting, just pre-COVID, you're getting about $1,500, $2,000 a month, something like that. The biggest shitholes, unrenovated, 1970s shitholes. This is on the inner ring of Park City by the mountain. This is by Main Street and all that stuff, just outside, like the Park City proper, without going into Park Meadows or past the high school and all that kind of shit. Those fucking things are going for, the rentals right now are going for $6,000-$7,000 for the shitholes. $15,000, $26,000, $30,000, heading up towards like Main Street. It is pure insanity right now, the housing market in Utah. Insanity. Like, unbelievable. Like, literally unbelievable. I want to keep that open for you so you can see it. Let's see what happens here. We'll see if these bears get their way, and then boom to the downside, or if they get reversed to the upside. The housing market right now it's like pure insanity. And here's the other thing. It's like the reason I'm watching right now is because we're coming into the point where realtors are trying to tell, well, yields were up this week, so there's like rates are still higher for mortgages, but realtors are out there pushing a narrative, of course, that, hey man, they're going to cut rates. Now's the time to do it. Sell, sell, sell. It's like sell, 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 sell. And then, of course, realtors are all pissed off about the new rules changes. Whole bunch of stuff going on with like real estate. Like my realtor friends are like, I'm not going to be impacted by this. And I agree with that. And realtors don't usually get 6% anyways. That's not the norm. It's the norm if realtors will get like, if you're buying like cheap housing, like, I don't know, 100,000 or less, or 50 grand or something like that, you'll pay a flat fee. But when you start getting on like 500,000 $1 million homes, they're not getting 6%. That shit is rare. You'll hear people say it's real, but it isn't. They'll be splitting that shit too between the buyers and sellers agents a lot of times. And you probably won't see too much difference, or at least my buddies are telling me. You won't see too much of a difference or hurt to realtors with these new rules changes. And I agree with that statement too. But people aren't selling is my point. I'm coming right back around to people are still not selling. They're not believing the realtors right now. And I'm talking about homeowners letting go of their homes. And that's what I'm looking for. I need to see if this will turn to yellow now. This becomes yellow. Bears want to hold this. It's not red. Bears want to hold that. If we break above this, you're going to see a bear trap coming up here. But like not bears. I'm looking for it because if the market becomes flooded with homeowners that believe that they're going to cut rates, doesn't matter if they're going to or not, if they believe that they're going to cut rates in the future, and they're like, you know what, I'm going to sell my house like I'm trying to do right now, right? And they start to flood the marketplace with homes, there's a chain reaction that takes place. You'll start to see like a whole neighborhood will start putting their houses up for sale. Buyers will be in charge of pricing at that point, where I can go to a neighborhood and say, look, there's fucking 5 houses for sale here. I'm not fucking fighting. I'm going to actually go lower in my offer. And what will happen is the housing market will begin to crash quickly. I'm not seeing that right now, heading into April yet. I haven't seen it. If you guys are seeing it, let me know. But I'm not seeing it as of yet. I'm not seeing the housing crash yet, or at least a quick, because the housing market's a really sensitive thing. It's like it happens so fast. When the housing market rolls over, it's so quick. You have to be like Johnny on the spot, paying very close attention to how many homes are for sale in one neighborhood. Is that the norm? Is that the normal housing that's for sale? Is it the like, were there always 5 houses in this quarter-mile area that were for sale, or is there now 25 or 50? houses for sale, 100 houses for sale. It's a nice litmus test for the stock market as well. Very nice litmus test for the stock market. Well, what are we doing here? What are we doing here? Are we going down all the way downtown or down here? Are we going to trade 52.93 or what? We going to trade that or what? You got to get underneath. You got to close underneath. You got to close underneath the 5-minute bar. That ain't going to work. No new low. Got the low right here, but no new low. They're going to get run over. Come on, Bears. Come on, Bears. Oh, you're so fucked now, Bears. You're so fucked. Oh, Bears. Oh, dude, Bears just can't catch a break. All pullbacks are supportive and positive gamma. Come on, Bears. Pullbacks are supportive and positive gamma. You buy the dip. Come on, you almost got it, Bears. You almost have it. Do it. Uh-oh, HYG blasting up right now. Be very careful here. If you're a bear, be very careful here. HYG with a reversal candle. They haven't quite gotten above. 3:56, 4 minutes left into this close. Bears about to get run over here. Should I buy some calls, some zero dates? Hold on. Hold on a second here. I'm telling you to hold on. You guys don't need to hold on. I need to fucking... Wait for me. Don't go up yet. Wait for me. I want to buy some zero dates right now. Come on. Come on, come on, come on, come on, come on. 3 minutes left. I want to see the big fucking run up to the top. Oh yeah, baby. Give me the run up there. Give me the fucking blast off. Give me the blast off. I can't get my brokerage open fast enough here. $5.25. Oh, those are cheap as fuck. Yeah, what about $5.26? All right, give me $5.25 into the bell. 2 minutes left. We've got trading until 4:15. See if we can creepy crawly it up the wally here. You know, I got a fucking mess going on here, don't I? This looks like I fucking broke out the fucking marine crayons. Trading 524.02. Which way are they going? Last bar of the quarter. Give me 525 into the bell, baby. Keep going. Oh. 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 Woo! Woo! Whoa! Oh, dude, my puts are good. They just took. So I got a bunch of calls. I got fucking 524s. They're at 1 penny right now. My put spreads are good, and I still own 524Cs here. Still own 524Cs. I'm closing out put spreads right now, though. They kept it under 520 fucking. They kept it under 525. Holy shit. Woo! I'm going to catch a fill on these put spreads here. Come on. Go down. Go down or go up. I don't care which way you go. Oh, yeah. I'm going to fucking lose my time here. Hold on a second here. I'm trying to catch a close, right? I'm trying to get out of some put spreads, and I'm not getting my closes here. And I got some zero-day calls still right now. They're fucking 1 penny. 1 penny right now. I'm trying to think if I should take a trade for Monday down here, too. Think about how low we go. I might grab some calls for Monday, but maybe I should be making a call spread. I want to see what this last 15 minutes are here. If they blast this thing up, or if they blast this thing down in the last 14 minutes or so. 403. Another 12 minutes left. And I got some destroyed calls in here. I bought some calls. They ran them straight down, burned like 30 cents in one bar right here. Maybe I should just leave the calls on to the close. Into 4:15. Well, I guess I got to watch it at 4:14 and see what they do. All right, while we wait for this to happen between now and 4:15, I will see all of you guys on Monday morning at 9 a.m. You're going to get crypto updates through the weekend on the Discord. Expect a pretty big brief and stuff on Sunday, right around Sunday between 12 and 5 p.m. You're going to start to see data dumps, a pretty big market brief for supporters. So everyone will have access to all of that stuff. And then if you're a pro trader, you're going to get huge charts. You're going to get charts for like, you're going to get Elliott Wave stuff for a bunch of commodities. You're going to get Elliott Wave for commodities, crypto, oil, energy, the normal market stuff, Tesla, all that kind of stuff with 1 hour, 4 hour, and 1 day charts. And those dumps will come out on Sunday afternoon for pro traders between 12 and 5 p.m. so that you're prepared for Monday. I don't expect the market between now and Monday to do much. If they're going to sell the market, it likely takes place on the open of Monday. If not later down the road, a week or two down the road, it should take some time for that correction to begin. I'm not expecting to wake up on Monday and see us down 30%. You could put some put spreads on, date them out for like 4 or 5 weeks, 6 weeks, something like that. In case you do think we roll down into Monday, you wake up Monday and you think we're going to be down 10% on Monday or something. Some kind of doom or gloom is going to happen. Now is the time to do it between 4 and 4:15 p.m. between here and here. My put spreads are now closed, so I'm good to go on my put spreads, but I've got calls on right here. I had to actually take less money in here on my put spreads. I didn't make shit, dude. I didn't lose any money, but I didn't make a bunch of money either. So I'm kind of pissy about that. What else? I think that's it. I'll see all of you guys. Happy end of quarter. Happy end of March. I'm looking forward to Q2. Q2 expectations at this point. I'm looking for a small correction off 530, 535, and then I'm looking to trade 550 with a major correction coming after that 550 tag. We should see a nice big fat bloodbath in the marketplace. Even with that big bloodbath, though, we should still hold 490,500. Bulls need to be defending 5,200 down to 5,000 for those trades to hold up into end of summer. If the Bulls begin to lose 490, look the fuck out to the downside. I'm losing my voice again. All right, I'm going to leave this up here. I will leave the stream up until 4:15. 4:14, I want to make sure that my calls, I close them out the last minute here. So I'm going to leave the stream up, and I'll be here with you while we watch this happen. Otherwise, have a great, great weekend. Get outside, touch grass, touch the snow, do whatever it is you're going to do. I'm going on vacation. I hope that you do too. Please go outside and do something. Refresh, reset for the next quarter. They got me on zero now on those calls. Cleaned them straight out. Pay attention between, if you've never seen this before, watch what happens between 4:15 and 6 p.m. All right. We've got one more minute. I think about 1 more minute to the close, end of the quarter. I will see you all on Monday, baby. Calls went to 0. Later.